Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, we welcome you all at the second day of the International Ensure Impact Conference 2023. We are thankful to all of you for being here with us. We'll start off with the recitation from the Holy Quran.
بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد.
Jazakallah. May I now request all of you to please stand up for the national anthem of Pakistan. Ladies and gentlemen, on behalf of our Chairman, Securities and Exchange Commission of Pakistan, Mr. Akif Saeed, Commissioner for Insurance, Mr. Amir Khan, and Mr. Abdul Rahman Wadaij and Mr. Mujtaba Ahmed Lodi, and the whole SECP team, we would like to welcome you at the second day of the International Ensure Impact Conference 2023. Yesterday, a brief recap, we talked about the SECP's 5-year strategic plan. We talked about disaster risks, disaster insurance spanning crop insurance and livestock insurance. We had an in-depth dialogue on compulsory insurances, taxation, as well as on insurance awareness and consumer protection. So we do have a very good jam-packed day for today, the second day and the last day of the conference as well. And we thank you for being here with us, and we welcome you on board. Ladies and gentlemen, I am a bit short on words. We have with us Dr. Ishrat Hussain Saab. He needs no introduction, but just to aptly introduce him, Dr. Saab is currently the Chairman of Institute of Business Administration, Center of Excellence in Islamic Finance. He is an author, an economist. He is the former governor of the State Bank of Pakistan. He is the ex-advisor to the Prime Minister for Institutional Reforms and Austerity. He was the Dean and Director at Institute of Business and Administration. We are thankful to you, Dr. Shah, for being here with us, and we really look forward to for gracing us at the event. And may I now request Dr. Saab to please deliver his keynote speech. Thank you so much, sir.
Bismillah ar-Rahman ar-Rahim. Chairman, Commissioners of the SECP, distinguished ladies and gentlemen, it's my great pleasure to be with you this morning. Although I do not pretend to have any expertise in insurance, but I'm very grateful to the Chairman and Amir, for inviting me to share my thoughts in the overall context of the national economy and the financial sector, where insurance can play an important role. And I'm very happy that this conference is being attended by members of the industry, because it is the joint effort of the industry and the regulator which really takes things forward. And I'm happy that this is happening. The regulator is not only supposed to be a tough like headmaster, but it is also like to be a coach, a guide, an advisor. And there is a distinction between regulating new ventures and regulating the existing established ventures. So I can give you my own example. When I started the Islamic banking and the microfinance, I was in fact a partner, a coach, a guide, not a regulator. It was very light regulation. We nurtured these industries because they were at the infancy stage. But we were very tough with the established commercial banks because they have matured to that extent. So my request to the regulators in SECP, which are quite enlightened, and I know them personally, is that you should have two-track approach. This is a world of dynamic change, so your regulatory oversight must be very light for those who are either being born, nurtured, or getting into the next stages of maturity. And I hope that this conference will think about what are the essence of the innovative changes which require a oversight different from what the existing regulations are suggesting. So one of the recommendations I think from the industry should be as to where are the stumbling blocks, because I hear all the time कि जी रेगुलेटर ने ये कर दिया, रेगुलेटर ने वो कर दिया, बड़ा टफ है, हमसे काम नहीं हो सकता. I hear this from the banks also. So let us leave that mindset and try to work together in order to develop the non-banking financial sector. And why I say this, because I looked at the data for FY12 and FY22, and I was very much shocked that in FY12, the banks and the DFIs had only a share of 73.8%. A decade later, their share has gone up to 81.7%. This is not the right direction. I would have expected that the non-banking financial sector, which includes insurance, asset management companies, and others, should have risen much faster than that of the banks. Their share has almost remained stagnant at 9.4%. It has risen to only 10.2%. This is something which you have to think about. And you have a whole plethora of institutions which you have established. You have asset management companies, you have pension funds, you have REITs, you have private equity funds, you have venture capital funds, you have leasing companies, housing finance companies, investment finance companies, mudarbas, you name it, and you have all these institutions. Together, they should be playing a much better role than what they are. So it is a time for stock taking as to why you are establishing all these institutions, but they are not capturing the market share or expanding the pool. Why do we need the pool to expand? And it's simple arithmetic. Pakistan's national savings rate, thanks to the remittances, is almost 12, 13%. But the investment ratio, which is constrained by the domestic savings because you have to borrow the foreign savings, is about 15%. With an incremental capital output ratio of almost 4, you can only get 3.5% growth rate. With a population rate growth of 2 and 2.5%, you would have only 1% growth in your per capita incomes. That means it will take you 70 years in order to double your per capita incomes. You're already behind Bangladesh, which is $2,700, and Pakistan is $1,600, and India is $2,200. Imagine they are growing by 6 and 7%, and their population growth rate is also close to 1 and 1.5%. So where is the magic? The magic lies in domestic savings. Of course, the government is dis-saving. So you have public sector, which is dis-saving, you have corporate sector, and you have household sector. And the objective of all the non-banking financial institutions should be to mobilize the household savings and the corporate savings in order to augment. India's and Bangladesh's investment ratio is 30%. They used to be like us, 15%. But now they're gone to 30%, and look at the growth rate. So it is incumbent upon the non-banking financial sector, which is under the supervision of SECP, to mobilize domestic savings, either through the asset management companies, either through the voluntary pension funds, or the insurance sector, whatever it may be. I cannot make that determination, but my general thrust is that we have to go from 15 to 20 to 25 to 30% at least over the next 5, 6, 7 years. And your role in insurance sector would be very high. Now, the second point I would like to make is the digitalization and the power of digitalization. I was looking at India, which is an insurance penetration ratio of 4.2%, and the insurance density of $77 as compared to less than $10 ours, and ours is 0.89% penetration ratio. 574 million people are enrolled in their health insurance. And here, except the state life insurance, which has come in because of the Sehat Salat card, the private sector has not stepped in the health insurance. And there, it is both the private as well as the public sector which are participating. And by 2026, they will reach $222 billion of the insurance market. The growth rate is 33% per annum. And what are they doing? They have adopted robotic process automation and artificial intelligence to drive their new data channels, better data processing, and advancement in bots, which will maintain both the front and back office to automate policy servicing and claims management for faster and more personalized customer service. Their penetration in crop insurance for small farmers has also taken off. The IPO of the Life Insurance Corporation, which is really like our state life, was the largest IPO ever in India, which accounted for more than 1/3 of the resources mobilized in the primary equity market. And I was very, very surprised that a country which is almost 10 times our economy has only 57 insurance companies, 24 in life and 34 non-life, as compared to a smaller country like ours, which has 42 companies. It doesn't make sense to me. You're not really having economies of scale. You don't need fragmentation in the insurance industry. I don't see mergers and acquisitions taking place. I don't see the winding up of the insurance companies which are not viable. Why is it? Is it because your capital adequacy ratios, your solvency ratios are very lax, or what is it? I don't know the answer. As I said, I'm a complete stranger to the industry, but I can raise these questions. So my advice is that you have to go for rapid digitalization and go for product innovation, progressive regulation, and multiple distribution channels. That will take your industry much better. I'm also very interested in financial inclusion because the banks haven't done very much in that area. We introduced the new policies for financial inclusion and new instruments, but it still is not very happy. So I would very much like you to go into health insurance, into crop insurance, in disaster risk insurance, and micro insurance, and takaful, because look at the record of Islamic banking. It has now become the fastest growing segment in the banking industry. 74% of Pakistanis prefer to go for Islamic banking. And the demand is so outstanding that some of the banks are expanding their branches of Islamic banks, and some of them are thinking of converting them. So why can't we do that? You have only 11% to 12% share right now of takafuls, both the family takafuls as well as the general takaful. Why can't you raise this share to at least 25, 30%? Because the people who do not trust the conventional type of insurance policies would come up and enroll in takafuls. The other thing is voluntary pension schemes. I'm trying to convince the government, since I submitted the report in 2009, 2010, as the chairman of the Pay and Pension Commission, that we should move away from the defined benefits to defined contribution and create the pension funds of all the federal government and the provinces. And the government has said, yes, we will do it, but it's been almost 14 years, 13 years that they haven't done it. But at least you mobilize the corporate sector of Pakistan so they can have their own pension funds, which you can manage. And this is a big instrument for saving mobilization all over the world. On the long-term investment, insurance companies and all other contractual savings instruments like the provident funds are very much attuned to long gestation infrastructure investment projects, because the banks have the asset liability mismatch. They get the short-term deposits, so the maximum they can go is about 5 years or 4 years, but long-term infrastructure projects take 10 years, 12 years. And who invests in this? The investors are always the insurance companies, the provident funds, and other contractual savings instruments. So even on the investment side, there is a lot of scope for you that you can supplement the deficiencies of the banking sector as well as the dis-savings of the public sector, public finances. So here is an opportunity for you both on mobilizing the savings, but also using the savings for investments which are going to help the country as far as its development is concerned. So I was looking at the objectives of this conference and I'm very impressed. But I was telling your chairman and your commissioners that in Pakistan we have beautiful reports, strategic plans, conferences, workshops, discussions, but the problem lies in implementation. So I hope that this conference is different from others, that you develop an action plan with milestones, with the responsibilities given to the various players, regulators in the industry, with the timelines. And then you take a stock taking as to whether things are moving in the right direction or not. If they are not moving in the right direction, what do you want to do in order to realign them on the right track? Unless you do that, we will have very good speeches. People like me come and tell you and preach some precepts, but nothing happens and things go on as usual. So the disconnect between our plans, conferences, and action is something I hope that you will be able to fulfill. And I really think that the objectives are first rate. There is no, you want to create awareness regarding insurance products, but you have to get out of the five-star hotels and you have to go to the entire country. You can't just have the conferences and seminars sitting here, because these are all converts. They all know and they are aware about the insurance products. You have to get out of the big cities, Karachi, Lahore, Islamabad, and go out to the other cities where there is an opportunity for you to sell your insurance products and make them aware. Then you want to leverage technology and collaboration for innovation, which I pointed out. India is way ahead, and you should now try to follow that. And there's no harm in following successful practices. And you want to build resilience through crop and disaster risk insurance, which I said this is very, very important. But I want you to add health insurance also to this, because the crop is for the small farmers, but health is for the poor segments of the population who cannot access good quality medical facilities. And they fall back in poverty lines because their sources of incomes dry up. So there is a correlation between poverty and health. So if you can help these people who are at the prone to diseases and they are in the lower middle class, you would be able to really make a difference as far as poverty reduction is concerned. Then you want to create pools to deepen in-house insurance and reinsurance capacity. I don't know how you would go about this, but this seems to me a very sensible objective. And you want to have improvement in governance and risk management. As a student of governance, I can tell you that all our faults, if you look at any sector of the economy, lies in our weak governance. And if you are able to come to grips with the governance structures and make them robust, I can assure you that your industry will take off. Thank you very much.
May I please request Akif Saab, Chairman SCCP, and Amir Saab, Commissioner Insurance, for presenting shield to Dr. Ishar Saab. Thank you so much, sir. Thank you so much, Ishita Saab. Thank you so much, sir, for the kind words, for the insightful speech. We'll be quickly moving on towards a pre-recorded message from Miss Amanda Hug, who is from the Society of Actuaries, our co-sponsor for the event. Miss Amanda Hug is the SOA President-elect and Vice Chair. She will become the 76th SOA President and Chair at the 2024 Impact Conference, the SOA annual meeting. She is a director at the WTW, where she leads the New York office and supports clients in transformation, analytics, and litigation spaces. May I request the technical team to please can we have the video recorded message from Ms. Amanda Hug? Thank you.
Hello, my name is Amanda Hug, and I am pleased to greet you and welcome you on behalf of the Society of Actuaries to the International Insure Impact Conference hosted by the Securities and Exchange Commission of Pakistan. While I'm not able to attend in person, and I wish I could be there with you all, I am happy to express the SOA's support for the event, as well as the development of the actuarial profession and the insurance industry in Pakistan and the broader region. I am the current SOA President-elect and Vice Chair. I will serve as the 76th SOA President and Chair beginning in fall 2024. I'm also a director at WTW, where I lead the Insurance Consulting and Technology Life Office here in New York, and I support my clients in the transformation, automation, and litigation spaces. So today I want to talk to you a little bit about what the SOA is doing and our efforts now and in the near future to support the actuarial profession and the industries in which you guys work in the region. So zooming out a little bit, the SOA has 32,000 members globally. In South Asia and the Middle East, Pakistan plays a particularly important role for the actuarial profession, as we know that the roots of the profession in this region go back as many years to at least the 1960s. So that's 60 some odd years at least, so that's fantastic. And because of that long-standing history and tradition, we have approximately 90 credentialed actuaries in Pakistan, but we know that the impact of Pakistani actuaries is even greater as they work across the Middle East, particularly in the GCC. And I had the pleasure of meeting so many of you in Riyadh recently, and so that was really fun for me. We know that actuaries from Pakistan hold prominent roles such as federal ministers, regulators, banking presidents, insurance CEOs, and senior leaders in countries like Saudi Arabia, Qatar, UAE, in addition to Pakistan. In addition, Pakistan has a strong pipeline for future actuaries, with approximately 300 people who have taken SOA exams in the last year. So that's indicative of where we're looking to go with the profession here. And the influence of Pakistan in the region is significant, as it's both a hub for actuaries in the region, and you guys are a net exporter of actuarial services and talent for work done for many nearby countries. But that being said, we do think this is just the beginning. We think there's significant growth opportunities for the profession here to support the ongoing development of the insurance industry, such as the work laid out in the SECP 2023 to 2028 strategic plan. And the SOA is committed to supporting that growth. And so I want to share a little bit about the SOA strategy. And our strategy really helps guide our board of directors in making our decisions and making sure that we're doing the right thing by our members. Let's start with what the purpose is. The purpose of the SOA is to empower members to drive solutions to life's financial risks. And that really encompasses our mission and our vision. It's what we're all about. How do we do it? We do it through engaging a diverse community. We do it through preparing actuaries to leverage their technical skills to become business leaders, like so many of you already have. And we do it by providing education and research globally so that our members can meet the opportunities and challenges that they're facing in their companies and in the insurance industry at large. As part of our strategic plan, we have 4 strategic themes, and they are emphasize education on skills, cultivate community experiences, spotlight societal purpose, and accelerate international growth. And I would love to tell you all about those, but in the interest of time, I'll dive a little bit deep on a few, but you can always check our website for more information. So in the education area, we just announced, and I am so excited about this because I was privileged enough to chair the task force that recommended these changes to the board. We announced key enhancements to the fellowship pathway. We're going to provide a better learning experience, increased flexibility while maintaining rigor, and greater global relevancy. How are we going to do that? One example is that we are going to eliminate the concept of tracks, where you have to take all of your FSA courses in one practice area, and support actuaries like you all who are working across practice areas. Maybe you practice in auto and health and retirement in one job. And so you'll be able to select the courses that are most relevant to your day-to-day work. So really excited about that. The changes go into effect in 2025, and we've gotten some good feedback from our members so far, including some of you that I was able to chat with in Riyadh. In addition to our credentialing pathway, we also have certificates, so feel free to check those out. Those cover hot topics. So for example, we have an International Financial Reporting for Insurers certificate, and that's a comprehensive course that focuses on IFRS 17 in a lot of detail. We also have a new certificate on climate risk that just came out, and that's getting good interest as well. Second, moving to the pillar of accelerating international growth, our goal is to have a vibrant global membership that is supported by SOA services that are customized to meet your local market needs. And so with that, I want to talk about what is happening in Pakistan. So first of all, in 2021, the SOA created the Middle East, Africa, and Pakistan, otherwise known as the MAP task force. And we're really pleased that what started as a temporary task force is now a standing committee, permanent, and shows our commitment that we're planning on being here for a while in this region. The current PSOA president, Mr. Mohammed Usama Dangra, FSA in Sira, he currently serves as the local representative for Pakistan to this committee. So he's helping be that bridge between what's going on in the ground there and what our MAP committee is doing. I've alluded to this, but we hosted our second annual regional symposium in Riyadh. We had over 200 attendees and really strong Pakistani representation. That was double the attendance from last year in Dubai. So looking to keep continuing these events in the region and hopefully bringing people together and celebrating the growth that we're seeing. I'm also really excited to report that the SOA staff is in the process of opening a Dubai-based representative office. And we are going to have a regional director, Zain Ibrahim, who's an SOA member and an actuary from Pakistan. He'll be leading the office focused on the Middle East, Africa, and South Asia. And then we'll have a second staff member who's serving as a marketing manager for our SOA international efforts, which will include this region. We're also experimenting with pilot programs for scholarships and revised discounts in certain markets, which includes in Pakistan. And pending the results of the pilot in 2024, we'll figure out, does it make sense to roll out on a broader basis? And through these programs, we're really trying to ease the financial burden. We know it's expensive to pursue an actuarial credential, and so we want to offer some relief, especially to those that are just starting out in the process. In addition, we're working on research specific to the region. So for example, we're in the middle of a mortality experience study project with GOSI in Saudi Arabia, where we're providing project guidance as GOSI staff is carrying out the study. And then here in Pakistan, we are initiating quarterly calls with the SECP to identify how can the SOA support actuarial capacity development and related trainings on topics like IFRS 17. And these developments are tangible statements. We are committed to you, we are committed to this region, and we want to understand and meet the needs of the members that are here. And so thank you so much for the chance to talk about these developments and our commitment to you and the profession globally. We really look forward to future opportunities of partnership with the SECP, the Pakistan Society of Actuaries, and the insurance industry here in Pakistan. So I wish you all the best for a successful conference. Thank you.
Thank you, Ms. Amanda Hag, for the recorded message. I'll be quickly moving on to our recorded message from our chief guest, the Honorable Dr. Arif Alvi, the President of Pakistan. Dr. Saab had to join us in person, but unfortunately due to commitments, he has sent a recorded message. And we all know that He also talks very good about insurance and likes to talk about obviously health insurance as well as insurtechs and technology. So ladies and gentlemen, a recorded message from our chief guest, Honorable Dr. R.F. Alvi, President of Pakistan, please.
बिस्मिल्लाहिर्रहमानिर्रहीम। मोहतरम आकिब सईद साहब, चेयरमैन सिक्योरिटीज एंड एक्सचेंज कॉरपोरेशन ऑफ पाकिस्तान, ख़वातीन व हज़रात, आप सबको अस्सलाम वालेकुम। मुझे बड़ी खुशी है कि इंटरनेशनल इंश्योर इम्पैक्ट कॉन्फ्रेंस IIC 2023 के जो डेलीगेट्स हैं उनके साथ मैं इंश्योरेंस के हवाले से गुफ्तगू कर सकूं, क्योंकि मैं इस मामले को प्रेसिडेंसी के नीचे एक इंश्योरेंस मुहतसब भी होते हैं और केसेस और डिस्प्यूट्स आते रहते हैं। उस हवाले से मेरी आगही इंश्योरेंस में काफ़ी बढ़ गई इस दौरान, मगर मैं हमेशा से इस बात से वाकिफ़ हूँ कि ज़िंदगी भर कभी आग लगी मेरे घर के अंदर तो इंश्योरेंस की तरफ मैंने देखा, कभी गाड़ियों के एक्सीडेंट हुए तो इंश्योरेंस की तरफ देखा। कोई भी गुड्स दुनिया के अंदर जब मूव करती है तो इंश्योरेंस का इम्प्लिकेशन होता है। अच्छा, और इसका एक्सपीरियंस जो है वो कभी अच्छा भी रहा और कभी बुरा भी रहा। असल में इंश्योरेंस की पेनिट्रेशन जिसका जिक्र है कि 0.87% है पाकिस्तान में, तो बहुत ही लो है। इसकी वजूहात क्या होंगी? इसकी वजूहात ये है कि एक कंजर्वेटिव माशरे के अंदर एक सोशल इंश्योरेंस का इम्कान रहता है। हम ये समझते हैं कि हम अफोर्ड कर सकते हैं तो हम एक सोसाइटी हम इंश्योर कर लेते हैं, यानी अच्छा ख़ानदान गरीब रिश्तेदारों के हवाले से उनको इंश्योरेंस कर लेता है, कुछ अपनी कुछ लॉस बर्दाश्त करने के काबिल हैं तो अपनी इंश्योरेंस खुद ही कर लेते हैं। तो एक तो सोशल इंश्योरेंस है, मगर इसके साथ साथ एक अपॉर्चुनिटी दुनिया के अंदर रिस्क इवैल्यूएशन के साथ एक प्रॉफिटेबल एंटिटी भी ये बन गई कि इंश्योरेंस कंपनीज नमूदार हुई जिन्होंने रिस्क कैलकुलेशन करना है। रिस्क कैलकुलेशन का मतलब ये कि गाड़ी के चलाने के अंदर एक ड्राइवर हो जो नशा करता हो तो बड़ा ख़राब ड्राइवर है तो उसकी रिस्क बढ़ गई, और एक ड्राइवर बड़ा सेफ हो तो उसकी रिस्क कम हो गई। तो इंश्योरेंस चार्जेस ही एतबार से ऊपर नीचे होते हैं। तो ये इंश्योरेंस कंपनीज अपनी रिस्क कैलकुलेशन के हवाले से प्रॉफिटेबिलिटी में भी हैं, मगर साथ साथ में जब पाकिस्तान में यूजेज देखता हूँ तो बहुत ही कम 0.87% इज़ वेरी स्लो। इवन नेबरिंग कंट्रीज हैव हायर यूज ऑफ इंश्योरेंस। अब जब हम इसको देखते हैं कि मसाइल क्या, तो मैं अपनी ज़ात के हवाले से आपके सामने अगर मसाइल बयान फरमाऊँ तो ये होता है कि जी जब कोई वाक़या पेश आ गया तो इंश्योरेंस कंपनी इज़ रिलक्टेंट टू पे अप, है उसमें हीले बहाने तलाश करे। दैट इज़ द रिस्क दैट कैरीज अ बैड वेट एज फार एज सोसाइटी इज़ कंसर्न। तो मैं मिसाल दे रहा हूँ आपको, क्योंकि इंश्योरेंस मुहतसिब साहब ऑनरेबल जमील साहब मेरे नीचे इदारा चलाते हैं, तो उनके यहाँ जो अपील्स आती हैं तो वो वहाँ से फिर अपील मेरे पास आती है। उन अपील्स के अंदर कभी कभी मिसगाइडेड इंश्योरेंस है, मिसकंसीव्ड कैफियत है, उसको बेचा मुख्तलिफ अंदाज से गया है। तो एक शुरू के अंदर ही बहुत सारे लोग आते हैं कि जी हमें तो अंदाज़ा नहीं था कि ये कैसी इंश्योरेंस है। फिर लोग परेशान होते हैं। अच्छा, और इसके अंदर मैं अब इस नतीजे पर पहुंचा हूं, मिसाल के तौर पर कंस्ट्रक्टिव बात आपसे करूं क्योंकि बहुत सारी चीज़ें हैं जिनको एड्रेस करना पड़ेगा। कंस्ट्रक्टिव बात मिसाल के तौर पर बैंक एश्योरेंस के हवाले से मैंने ये देखा कि इंश्योरेंस कंपनीज की एजेंसी बैंक भी बना, और बैंक के साथ जो हुआ तो सेलर को उन्होंने अप फ्रंट बहुत अपलोड किया कि जो पहला प्रीमियम है वो जो सेलर है बैंक का जो मुलाजिम है वो पहला प्रीमियम उसको 40 से 50% या 60-70% तक मिल जाए या 40% मिल जाए। अच्छा, लिहाजा उसकी सेलिंग इंटेंट का, मैं बायर हूँ बैंक में, मैं बायर भी नहीं हूँ, मेरे पास बैंक में डिपॉजिट आया जो मैंने बहुत जगहों पर देखा, तो उसको ख्याल आया, जो सेलर है बैंक एश्योरेंस का, जो बैंक का मुलाजिम है, उसको ख्याल आया कि ही इज़ अ राइट कैंडिडेट। उसने मुझे अप्रोच किया और उसने जिस अंदाज से मुझे सेल किया तो मुझे ये नहीं मालूम पता चला कि इसका अपना इंटरेस्ट 40% है पहले प्रीमियम के अंदर, तो वो उसने ईगरनेस के साथ बेचा। देखें, हमेशा इस्लामी तारीख के अंदर भी ये रहा, और जब आदमी कोई चीज़ बेचता है तो वो ग्राहक को कन्विंस करता है कहकर कि जी मेरा तो इसमें मुनाफा 5% है सिर्फ, या कभी आदमी कहता है कि जी ये फल खराब हो रहा है, मेरा इसमें 1 रुपया भी नहीं बच रहा, एंड दैट मोटिवेट्स अ पर्सन टू बाय। अच्छा, ये है ट्रांसपेरेंसी, है। अगर ये पता चले कि जी ये जो बेच रहा है मुझे ये पता नहीं क्या क्या वादे करेगा और इसका तो मुझे पता ही नहीं है कि इसका अपना इंटरेस्ट कितना है, तो मैं अब ये सिक्योरिटीज एंड एक्सचेंज कॉरपोरेशन से दरख्वास्त करना चाहता हूँ कि आई एम अ बायर, مجھے پتا ہونا چاہیے کہ جو بیچ رہا ہے اس کا کتنا انٹرسٹ ہے, کہیں وہ بیڈ سیلنگ تو مجھے نہیں کر رہا, کیونکہ بہت سارے کیسز ایسے آتے ہیں. تو دیٹس ون مشورہ میں نے آپ کو دیا. پچھلے دنوں میں نے یہ دیکھا کہ فلڈ کی وجہ سے کراپ لاسز بہت ہوئی, اور انشورنس کوریج جو ہے وہ لوگوں نے نہیں کرایا تھا. صرف جن لوگوں نے بیچاروں نے لونز لیے تھے بینک سے, تو بینک نے ایک انشورنس کیا ہوا تھا. دس از اے ویری فرٹائل فیلڈ جہاں پر انشورنس کمپنیز کو بڑا موقع ہے, اس کو چاہے, مگر اصل میں تو معاملہ یہ ہے کہ آپ کی گڈ ول بڑھے. اصل میں تو معاملہ یہ ہے کہ آپ لوگوں کو کنونس کر سکیں کہ بھئی یہ تو اتنی اچھی پروڈکٹ ہے, یہ تو تمہیں فائدہ ہی فائدہ ہے, 1% میں یا آدھے فیصد میں تم کو منافع ہے. اچھا, آپ ری انشورنس بھی کر سکتے ہیں. یعنی اگر کوئی کلیمٹی آ جائے مثال کے طور پر, تو دنیا میں ری انشورنس ود بگ کمپنیز لائک لائڈز وغیرہ ہوتا ہے. تو اگر فلڈز کی جو ڈیمیجز تھی پاکستان میں, اگر وہ انشورڈ ہوتی اور ری انشورنس ہوتی 5-10% کا بھی, تو وہ پاکستان کے لیے بہت بھلا ہوتا. اب ہوتا کیا ہے, میری حکومت پاکستان جو اس وقت فائنینشلی پریشرز میں ہے, وہ ایک سوشل انشورنس کرتی ہے. لوگ اس کے اوپر پریشر ڈالتے ہیں, مثال کے طور پر کہ جی ایک تباہی ہو گئی, کلیمٹی ہٹ ایریا ڈکلیئر کیجئے, ہر شخص کو پھر 5 لاکھ 10 لاکھ ڈیپینڈ کرتا ہے وہ حادثے کے اوپر. تو گورنمنٹ آف پاکستان ایک سوشل انشورنس کرتا ہے جس کی ٹیکسیشن عوام سے لیتا ہے, مگر سوشل انشورنس کرتا ہے. اس کے ساتھ ساتھ اگر لوگ خود موٹیویٹ ہو کر کمرشل انشورنسز کی طرف آئیں, یہ آپ کا کام ہے. لہٰذا گڈ ول بھی انتہا ضروری ہے. پیپل شوڈ ٹاک گڈ اباؤٹ دی انشورنس, ہے نا. اس میں ممکن ہے تھوڑے عرصے کے لیے آپ کی پروفیٹیبلٹی کم ہو, مگر اس بات کا امکان ہے کہ لوگوں کے اندر اگر آپ کے اوپر بھروسہ ہو تو لہٰذا لوگ کریں گے. رسک بینیفٹ مثال کے طور پر ہیلتھ انشورنس کرتے ہیں, بہت سارے کیسز ایسے آتے ہیں جس میں ہیلتھ انشورنس کی بعد میں جب اس کا انتقال ہو گیا تو انشورنس کمپنی کہتی ہے کہ جس نے بات چھپائی. میں سمجھتا ہوں کہ لوگ عام ڈیزیزز کا بھی بہانہ لیا جاتا ہے, ڈائبٹیز میلائٹس کا بہانہ لیا جاتا ہے, لیور سیروسس کا لیا جاتا ہے, اور بہت ساری چیزوں کا. تو سمپل ٹیسٹ ہیں, یہ ٹیسٹ بہت ایکسپینسو نہیں ہے, یہ آپ انشورنس کاسٹ کے اندر ڈال کر کریں, بٹ میک شیور کہ بعد میں یہ کانفلکٹ نہیں پیدا ہو کہ تم نے ہم سے بیماری چھپائی تھی. 90% بیماریاں 99% بیماریاں روٹین ٹیسٹ سے پتہ چل جاتی ہیں. اگر فرض کیجئے اس کو کوئی بیماری ہے, مثال کے طور پر ڈائبٹیز ہے, آپ رسک ویلیو کے اندر لے آئیے اس کو, ہے نا. مثال کے طور پر اس کو سیروسس ہے, وہ آپ رسک ویلیو کے اندر لے آئیے, کوئی بھی چیز. یعنی ایوری تھنگ کین بی انشورڈ ایز لانگ ایز آپ اس کو رسک اپریشیشن کو آپ اس کو انڈرسٹینڈ کریں. تو ہیلتھ کے اندر کارگو گڈز وہیکلز, یو ہیو ٹو ڈو یور ورک. آپ اپنے آپ کو پبلسائز کیجئے, دس از اے پروفیٹیبل انڈسٹری. میں آپ کو انکریج کرتا ہوں, برڈن آپ اٹھائیں, گڈ ول آپ کریٹ کریں, اینڈ دا اسٹیٹ شوڈ آلسو ہیلپ. جہاں کمپلسری انشورنس اسٹیٹ نے ڈال دی ہے وہاں تو انشورنس ہو رہی ہے. گاڑیوں کی مثال کے طور پر تھرڈ پارٹی ہوتی ہے, اب مجھے تو اس کی ریلیونس بھی نہیں معلوم کہ تھرڈ پارٹی کی کوئی ویلیو بھی ہے یا نہیں ہے. بہر صورت بہت ساری چیزوں کے اندر ایک کمپلسری انشورنس ہے. آپ گڈز امپورٹ کرتے ہیں تو جو بیچنے والا ہے اور سب لوگ چاہتے ہیں کہ جی آن ٹرانزٹ گڈز بھی انشورڈ ہوں, تو بڑا پوٹینشیل ہے. یو جسٹ نیڈ وائبرنسی in your insurance and SCCP کو as a regulator کہ اس کے اندر ٹرانسپیرنسی لے کر آئیں. and I believe کہ یہ بڑا پروگریسو سیکٹر ہے اور پاکستان میں اس کی بڑی سخت ضرورت ہے. so thank you ladies and gentlemen, انشاءاللہ آپ کی ڈیلیبریشنز کے ساتھ مثبت نتائج نکلیں گے. شکریہ.
I'll thank on behalf of the SSCP, the Honorable President of Pakistan for the recorded message. I guess the message was so simple, yet had completed all the aspects that we had been talking about and would also talk about today. Thank you to the Honorable President for the message. Ladies and gentlemen, we are just a bit behind on schedule. We'll now be moving to our first session for the day, which is elevating Takaful sector, in-depth dialogue. We had this recurring talk about Takaful yesterday. Almost in every session that we had this talk about Takaful and Islamic insurance from different perspectives. So we do have a complete power-packed panel discussion on it. But before that, we do have a recorded video message from the Islamic Financial Services Board from Dr. Abidin Ademi Adwal, who is Assistant Secretary General Standard Implementation. May I please request the technical team to please play the recorded message from the IFSB.
Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good morning to all participants of the International Ensure Impact Conference, IIC 2023, holding in Pakistan. On behalf of the Secretary General of the IFSB, Dr. Bello Lawal Dambata, and the entire IFSB Secretariat, I would like to express our profound gratitude for the invitation and heartfelt congratulations to the Securities and Exchange Commission of Pakistan, SECP, for organizing this significant event. This conference serves as a platform for distinguished speakers in the Islamic financial services industry to impart valuable insights on fortifying the stability, soundness, and resilience of the insurance sector, not only in Pakistan, but also globally. This, we have no doubt, will be achieved through the discussions and presentations during this IIC 2023, with the hope that it would also emphasize on the awareness, inclusivity, innovation, as well as the overall strength of the IFSI and the insurance sector in particular. The Islamic Financial Services Board is proud of its collaborative efforts with the SECP on many fronts. As an international standard-setting organization dedicated to enhancing the soundness and stability of the Islamic financial services industry, the IFSB views the topics under discussion at this IIC as pertinent and timely. Our participation in events like this is highly appreciated as they provide an opportunity to share our perspectives and also exchange ideas on regulatory and policy initiatives. Distinguished speakers, industry leaders, stakeholders, and participants, in 2022, the global takaful industry recorded a remarkable year-on-year growth of 16.1%, reaching USD 30 billion. This growth was fueled by strong sectoral performance in various jurisdictions, including Pakistan, which reported a total premium of 552 billion rupees and 10 million policies in that particular year. While the industry's growth prospects remain positive in many countries, including Pakistan, challenges also persist. Factors such as inflationary pressure, climate change-related financial risks, financial market volatility, and currency depreciation may as well impact the industry's outlook in the coming year. It is hoped, therefore, that the panel discussions during this IIC 2023 will focus on climate change, especially developments from the COP28 that recently held in Abu Dhabi, and implications for the takaful industry. Losses resulting from catastrophes and extreme weather conditions have increased by 250% in 2023, with perils such as wildfires and storms seen as particularly impacted by climate change, causing a high rise in insured losses, as well as other significant negative impact to the industry. The increasing magnitude, frequency, and severity of natural disasters have caused many insurers of property and casualty lines to change their approach models. Globally, takaful markets have had fair share of natural disasters, such as flooding, earthquakes, and so on and so forth. In this particular circumstance, it is hoped that the deliberations in this IIC would also focus on this challenge facing the industry. In recognition of the impact of digitalization to enhance operational efficiency, market penetration, and customer centricity, it is hoped that discussions by the esteemed panelists will also touch on digitally assisted distribution and sales capabilities, streamlining products, as well as prioritizing the development of direct digital channels, directing customers towards self-service channels, and implementing automated processing for straightforward claims. To improve regulatory compliance and supervisory oversight, the discussion, we hope, will also highlight on how to facilitate access to pertinent, trustworthy, and timely information for the takaful market players, and specifically takaful participants. These include promoting participant protection, enhancing capacity of regulatory and supervisory authorities to monitor and assess the performance of takaful undertakings, as well as the takaful undertakings. In that regard, they would be able to foster not only transparency, but market conduct and discipline. Distinguished speakers, industry leaders, stakeholders, and participants. The IFSB has issued 6 standards in the Takaful segment covering core principles, solvency capital requirements, risk management, supervisory review process, guiding principles for the Takaful, and it is presently working on standards for the conduct of business to be issued this year, and hopefully in 2025, another guidance or technical note on recovery and resolution. We acknowledge the recent unveiling of the draft 5-year strategic plan for the insurance sector by the SECP. We acknowledge also that it focuses on policyholder protection, building resilience, fostering innovation, enhancing cooperation and transformation, as well as improving overall insurance coverage. We hope that the discussions at this IIC 2023 will delve into the specifics outlined into that very comprehensive plan, including legal and regulatory framework, institutional development, innovative approaches and instruments, consumer protection, community awareness, and financial literacy, as the case may be. We also hope that the discussions will further discuss on how collaboration and partnership can be strengthened. On behalf of the IFSB, I once again wish to extend our best wishes to the SECP on the occasion of this IIC 2023, and we wish that the deliberations at this conference will be very fruitful and very, very productive. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.
A special thanks to the IFSB and Dr. Abedin for the message. Ladies and gentlemen, the panel, the session that we have would be running that we would firstly be having a speech from the Commissioner of the Specialized Companies Division and the Islamic Finance Department. And then we will be having a power pack panel discussion. May I kindly request Mr. Mushtaba Ahmad Lodi, who is Commissioner for the Specialized Companies Division and is also heading the Islamic Finance Department at CCP. Lodi Saab has extensive experience in global financial capital markets, risk management, regulatory frameworks, competition law, enforcement and compliance. He was also a member of the Competition Commission of Pakistan. Sir, the floor is all yours. Thank you, sir.
Thank you. Bismillah ar-Rahman ar-Rahim. Respected Dr. Professor Ishrat Hussain Saab, Honorable Chairman Akif Saeed Saab, my respected fellow commissioners, distinguished guests, and esteemed attendees. Assalamu alaikum and a very good morning to you all. At the outset, I would like to extend my heartfelt congratulations to the Chairman of SECP, Mr. Akif Saeed Saab, the Commissioner of Insurance, Mr. Amir Khan Saab, and the Insurance Division of SECP for arranging the International Insure Impact Conference 2023. This conference, in my opinion, will be a genuinely transformative event that has effectively brought together stakeholders, academics, experts, and industry leaders under one roof. In terms of advancing the insurance sector in our country, I am strongly convinced that initiative Journey to an Insured Pakistan signifies momentous and highly impactful phase. I am pleased that SECP has assumed the leading role in more structured and well-organized manner by introducing a 5-year strategic plan for insurance sector by the theme Journey to an Insured Pakistan. The SECP's initiative, in line with internationally recognized best practices, as demonstrated by successful execution of comparable plans in jurisdictions such as Thailand, Malaysia, and various other countries. These strategic plans offer a well-defined roadmap for all participants in the insurance ecosystem with the goal of safeguarding against unforeseen events. I feel that breaking down this comprehensive plan into short, medium, and long-term tenors, along with prioritizing its elements, reflects a thoughtful approach which I believe has been developed through thorough inputs and discussions from industry players and experts. The Islamic finance industry plays a crucial role in Pakistan, where 98% of the population adheres to the religion. The Federal Sharia Court has set a 5-year deadline for the transition to an Islamic financial system, demonstrating country's commitment to aligning financial practices with Sharia principles. The Islamic financial services industry has seen a remarkable growth, a 6.2% increase from the previous year. Islamic banking has the largest share with 6.5% growth year on year. Islamic capital market has a 30.5% share, while the Kaful share is mere 0.8%. These statistics highlight the need to focus on Takaful and expand the share of non-bank markets and institutions in the Islamic financial services industry. The SCCP has been actively promoting and developing Islamic finance in the country for the past year and a half. A comprehensive diagnostic review of non-bank Islamic finance in all regulatory sectors was conducted in February. A strategic plan for the next 3 years is being finalized to synergize efforts and focus on strategic issues. Islamic finance in non-bank sectors is significant, with 2/3 of the market capitalization and PSX consisting of Sharia-compliant securities. The substantial portion of assets under management of mutual and pension funds is Sharia-compliant. Pakistan, the fifth most vulnerable country globally, faces severe impacts from climate change and natural disasters. These events cause immediate human suffering and economic losses, pushing vulnerable populations into poverty. Risk mitigation and risk-sharing solutions provide solutions, financial protection, and facilitate a recovery, cushioning the impact on businesses and households. They also foster a quicker rebuilding process. To build an insured Pakistan, it is crucial to recognize the transformative power of Takaful, laying the foundation for a resilient insurance and Takaful sector. Takaful, a small portion of Pakistan insurance assets, saw an 11% growth in 2022, with the Takaful businesses only generating 62 billion PKR in premiums. However, there's a potential for future growth, and we, as our regulators and the industry, must focus on Takaful model, with window Takaful operators transitioning into full-fledged operators. Pakistan financial services industry is preparing for the Islamic financial system transition that will boost Takaful businesses. With a youthful population and a digital landscape coupled with innovative solutions, the goal of over 30% of the Takaful insurance sector is quite achievable. It is important to note here that the entire financial services industry in Pakistan is preparing for the transition to Islamic financial system, which of course is expected to provide a substantial boost to the Takaful business as well, leveraging demographic advantages, including youthful population, 65% under 35, and considerable digital landscape that exists, a tremendous opportunity for innovative solutions in the Takaful sector. I am sure that together we will achieve this ambitious target of over 30% of the Takaful in total insurance sector. SCCP is aware of challenges faced by the Takaful industry in Pakistan, including lack of capacity, education, and public awareness. We are promoting innovation through regulatory framework, addressing taxation issues. SCCP is open to new ideas and suggestions, aiming for more resilient Islamic financial services sector. The conference aims to chart the course of more exclusive insurance and Takaful sector, ensuring financial protection and resilience for all individuals and communities. Inshallah, we aim to and look forward to work to strengthen this industry, which will lead to the betterment of the wider economy of Pakistan. Once again, I would like to extend my heartfelt congratulations to the entire SCCP team for organizing such an impactful event. Thank you very much.
Thank you so much, Lodi Saab. Just quickly moving to our panel discussion, may I firstly invite our First Lady on the stage, Dr. Iram Sabah, who is an Associate Professor in the Department of Finance at IBA Karachi and is also a Sharia Board member at Salam Takaful Limited. She is the first female who has joined a Sharia Board in Pakistan, and she is also the recipient of most influential woman number 10 in the World Award in Islamic Business and Finance by Cambridge Institute of Islamic Finance. A huge round of applause for Dr. Iram Sabah. Next, we have Mufti Irshad Ahmed Ejaz Saab, who is the Chairman of Sharia Advisory Committee at the SECP as well at the State Bank of Pakistan. He is a seasoned trainer in the field of Islamic finance, fiqh, Islamic aspects of economics, Sharia compliance and audit mechanism, Islamic financial law, and general Islamic sciences and studies. Please, a round of applause for Dr. Irshad Saab. Then we have Mr. Umar Mustafa Ansari Saab, who is the Secretary General at the Accounting and Auditing Organization for Islamic Financial Institutions, IOFI. Umar Saab is a fellow member of the ICAP, and his key area of expertise include regulations and standards related to Islamic finance, banking, and takaful, as well as assurance and advisory related to Islamic finance. A round of applause for Mr. Umar Mustafa Ansari, please. Then we have Mr. Azim Pirani, who is the CEO of Pak Qatar Family Takaful Limited, a veteran of the industry, a part of the Pak Qatar Group, which is the first and largest dedicated takaful group in Pakistan. We also have with us Mr. Nasarus Samad Qureshi, who is the founding managing director and chief executive of Fifth Pillar Family Takaful Limited. He started in his career in 1974 and moved to UAE in 1977, where he served various insurance companies in senior positions. In 2006, he founded the Al Falah Insurance Company as managing director and CEO. And lastly, our own colleague, Mr. Tariq Naseem, who is the additional director, head of department of the Islamic Finance Department at CCP. He is leading us on the Islamic finance front. Tariq Saab has extensive experience of more than 24 years in the field of capital market. He is a fellow member of the Cost and Management Accountants of Pakistan. He also holds a Chartered Islamic Financial Professional degree from INSEEF, Malaysia, and MS Islamic Banking and Finance from IIUI, Islamabad. Ladies and gentlemen, the session on Takaful, the panel is before you. Dr. Inam, the floor is all yours. Thank you.
Thank you. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum and welcome to all of you. Thank you so much for inviting us today to talk about Takaful. We have a very wonderful panel over here, and I'm very happy to have two Sharia Advisory Committee members and the chair of the Sharia Advisory Committee of SECP, Securities and Exchange Commission of Pakistan, very respected Dr. Mufti Irshad Ahmed Ijaz Saab. And my first question will be for very dear brother Mufti Irshad Ahmed Ijaz Saab. When you talk about the products in Takaful, most of the products are considered as replica of the conventional products. When you talk about the products in the system, do you see areas where Takaful companies can come forward and build some innovative products for the Pakistani people?
Bismillah ar-Rahman ar-Rahim. Nahmadu wa nusalli ala Rasulil Kareem. Thank you very much, Dr. Durham, for this question. Basically, there are 2 points in your question. The first is the insurance replica, the replica product. So the basic reason for the replica product is the ease and common needs of, obviously, for example, the need for asset insurance, the need for health and need for life. So because of the need are common, therefore Islamic insurance companies, I mean Takaful companies, they generally try to launch a similar product. So acceptability is also easy, the application is easy, the laws are easy, the marketing teams are easy. But as we heard our respected Dr. Irshad Saab, there is a need for development and in-depth products, and especially for the health sector and many other areas which are not covered, and the penetration of Takaful or insurance. And really, I heard first time that we have far behind for coverage of this thing. And to add to this point, if we see after the corona that the health sector expenses are now increasing, and if you go to any big hospital, and especially I remember the case of Indus Hospital, and I remember one of my colleague who is working there is Indus Hospital. He said that now the people who are approaching us are not from lower class. Sometimes middle class people are also approaching because the expenses of medical are now going up. So there is a big need for developing the product for this health sector, for overall life, and also the products that have a good combination of investment and protection both, because of the in absence of these are capital market penetration, fraud schemes are now very boom. And I receive, if I am not mistaken, I generally receive around 4 to 6 queries a week about the products, about the scheme, which are basically fraud scheme. They say we are giving you the good returns, good benefits and protection, but ultimately they wipe out the investment. So I think one of the very important and good product that can attract attention of people on the basis of takaful, the combination of protection and investment, which some takaful companies have launched also. And also one area which we have, I don't know what is the reason, but we are lagging behind, and this is the estate insurance. Estate Life is a very big company, and I think modification and restructuring and focusing on this can bring a lot of changes, because the model of Estate Life is very much similar to the mutual insurance model, not the pure commercial insurance model. So the conversion on the transformation is much easy. And the last point that is very much required here, the awareness. And I completely agree with Dr. Saab. As Dr. Saab said, we have to go out not only in the 5-star hotels, should go to other areas. I mean, we can use universities, we can use masjid, we can use conferences, we can use these areas and these possible venues that from where we can spread the knowledge. And I generally say that if you go to any university and ask an undergraduate student, do you know what is Binance? He knows Binance very well, because they know cryptocurrencies, they know how to invest in cryptocurrency. But if you ask them, do you know what is takaful? So the undergraduate student generally, 10 to 20% they know, 80% of them, they don't know what is this. So I think the awareness for everyone, not only for those who are living in villages and or common people, also for educational institution, those who are working in educational institution, who are working in government sector, below grade 16, 17 and grade 14, they don't have any idea. So I think by creating awareness about takaful and also capital market, we can come up with the solution for this product gaps and product innovation.
Thank you so much, Mufti Saab. Brother Umar Mustafa Ansari, you are working in Bahrain as Secretary General, and mashallah, you have been to a number of countries and you have seen their models. What models we can replicate or learn or adopt from other countries where you see successful implementation of the takaful models?
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Sister Aram, you have raised a very good question, but why we just think of replicating things, conventional, other countries' models, from here, from there? Are we that bad that we can't do anything of our own? Let me remind you that at the time of inauguration of the Central Bank of Pakistan, what our Qaid said, he said we need to find our destiny in our own way. The conventional system, the financial and economic system of the West has its own great evils. We need to find our destiny in our own way. Somehow, unfortunately, we feel we have lost our direction at all. Some people will not be happy if I say a statement that the Pakistan's biggest problem on the financial and economic side is haram. We are in corruption. We are in haram of all sorts. Our business practices, haram. I'm sorry, at times, so many things, when I think again and again, I'm afraid that at times we do not think where we have lost the way, where we have diverged from the destiny that we were supposed to have. So from that perspective, sister, first I would say that it's not only the issue of what we find from the West or what we find from our brother Muslim countries. They have all their good things. Some of the things are there. We need to learn from all of them. But I don't believe that we need to find exactly one of the systems from them. One thing I would like to mention particularly, because we are talking not only insurance, but Islamic insurance here. One of the founding fathers of Islamic finance and economics, Dr. Nijatullah Siddiqui, and long time back I heard, I read his book, and I'm not that old, Dr. Shadbhai, I'm not that old. But somehow, my major part of my career somehow is with the Islamic finance. First interaction of Islamic finance I had at the age of 18, and I was just doing photocopies as a trainee in the audit firm. Sorry, I'm taking more time on this question, but we need to understand that the founding fathers, what they said. Dr. Nijatullah Siddiqui said that insurance is a must, because there was a debate between scholars that insurance should not be allowed. And why it should not be allowed? Because it is, again, there are fiqh issues about having the element of riba and all that, but a lot of people talk about tawakkul, a lot of people talk about that even if you do a Islamic model, it will have gharar, messer, gambling elements and all that. But he said some very crucial points. So one of the crucial points is on the social side, and one of the crucial side is on the economic side. The crucial side on the social side is that as a Muslim society, we are bound to take care of whole of the society, and this cannot happen. At those times, it could have happened in an unorganized manner. But today, with the population of 240 million people, you can't do it in the same way in an unorganized manner. So even if we want to find a solution to the social economic problems that we are having, for that we need to have a very strong social insurance system. At the government level, at the private sector level, we all have to play our part. Unfortunately, the government level social sector insurance, you can find very good models across the globe, but for the private sector social insurance models, as Dr. Ishrat also mentioned, and I think our respectable president also touched upon that thing, that part is missing. Right now, we are depending on our social circles without having an organized social insurance sector, and that is one area where we can have huge improvement. The second area that Dr. Nijatullah Siddiqui talked about, I believe, is a very fundamental thing that we miss out completely. He says that for an entrepreneur to go to the market and do some business, it is important that you manage his risk in a way that he is able to take risk. And if he is not able to take risk, he will not be able, nobody here will be able to come to the market and do some business. I need insurance for my inventory. I need insurance for my vehicles. I need insurance for my factory. I need insurance for my shops. And just recently, in last couple of weeks in Karachi, what we have seen, we need to support our entrepreneurs. So the question is, it's not about replicating West or replicating our Muslim countries. It is about finding our real solutions according to the core concepts of insurance. So insurance is not just about, sorry to say, making fool of people and charging them 80% upfront, 70% upfront. And sorry, takaful is not about just considering it as a product within the conventional market. Oh, I'm sorry. Those people who think about this thing, they are fundamentally wrong. However, just last comment on your point, that as of now, only Malaysia has a very good working model of takaful. But their takaful model has some issues from the Sharia perspective. Saudi Arabia cooperative insurance is another good model, but that is not completely Islamic. Even they acknowledge it. So from that perspective, learning experiences that we can have from within the takaful market are best to be from Malaysia. And I believe that the global industry is now working in a very integrated way, very much integrated way, and things are actually improving. One one of the aspects that we can learn from the newer markets and these more developed markets is the delivery channels. They are working on the fintech-based delivery channels, and I think Dr. Ishrat also touched upon this point. And this is what we need to learn from them. The agent-based system, the banker-based system, high and huge commissions, this is not something to work if you want to have a genuine workable insurance system, particularly based for Takaful. Thank you very much.
Thank you so much, Brother Umar. I would like to request Mr. Azim Pirani. SCCP has set a highly optimistic target of reaching to 30% of the insurance industry in the upcoming 5 years. Let's be optimistic. How do we get there?
Bismillah ar-Rahman ar-Rahim. I was just discussing with someone yesterday about the SCCP roadmap for the next 5 years, and I was telling them how it's very praiseworthy that the regulator has taken this initiative and taken this step of defining the road that we need to follow, and this was needed, no doubt about that. And I did point out to them, and I'll take this opportunity since you've asked this question as well, that the roadmap will need some kind of teeth to be able to be effective. Now, whether that be in the shape of carrots or sticks, either way, there will be something needed to push people along on that road. Because if left to themselves, in fact, this was something that we were discussing earlier as well, that if you look at the example of the State Bank, ever since the Federal Shariat Court ruling came, the State Bank has proactively been working on pushing the Islamic financial sector to move forward and sort of, bigger market share, but doing it in a regulated manner so that, branches that come on this side have to be Islamic, etc. So that's something that's probably going to be needed on the insurance Takaful side as well. We see I've been in discussion with a couple of boards as well as management of a couple of insurance companies. Proactively, they've also realized that, yes, the next step is moving towards Takaful. And so now they're progressively doing that exercise themselves. So 30%, I'm actually hoping that we go to 100%. Why not? The point is that whatever the regulator and the industry decides, there needs to be a very focused exercise in that direction. And alhamdulillah, on the banking side, we've seen that Faisal Bank has converted holistically, completely, and it's now a completely Islamic bank. Why can't that happen on the insurance side as well? I'm sure there are private entities already working in that direction, but I think just like the State Bank has been pushing the banking side, the SCCP, ideally, as part of its overall roadmap, should then also define targets that by this year, this much of your business needs to be Takaful. Nobody expects it to happen overnight, but at least if we begin the exercise, some will be faster, some will be slower, but as overall the financial sector would move in the direction of the ruling that the Federal Shariat Court had given. So, like I said, my optimistic hope that 30, I would want 100, but realistically speaking, even if we can have a plan that shows us getting to 30, that's a good place to start.
Thank you so much. I want to share that Pakistan is first in terms of introducing Wakala Waqf model. So, Brother Umar, just to appreciate our own country, Securities and Exchange Commission of Pakistan approved Wakala Waqf model for the Takaful companies, and that model is basically explored by a number of countries. So we do appreciate our own industry in Pakistan. Having said that, yeah.
Just a comment to be allowed on this very good point. Just a comment. I can mention some of the very senior scholars, global scholars, were consulted in a meeting, and that Takaful globally is appearing to be a failed model. Somebody was commenting, and the most senior 8-9 scholars were in that meeting physically, and a couple of them online. And even I can tell you that a couple of scholars were like agreeing to that. Yes, globally we can't see that success in Takaful. But one of the scholars, one of the most prominent global scholars, he mentioned that the model of Pakistan based on Wakala Waqf, we should all explore. And alhamdulillah, this is just Thank you for mentioning that. I wanted to mention that at the topmost global scholars level, this is identified that yes, this is a more workable model, inshallah.
Yes, thank you so much. So moving to Sir Nasser, as an industry veteran, your candid views on the factors that have contributed to the stagnant contribution of Takaful to the overall insurance industry in Pakistan.
Assalamu alaikum, bismillahirrahmanirrahim. I like the word veteran because it is my 50th year in this business, so and 50 wonderful years. And had the opportunity, I think about 47 years in non-life and now for 3 years in life. So the Kaful sector in the non-life has different issues. On life side, it has different issues. On the non-life side, what I saw and when we built up at the Kaful window, and we used to speak to other colleagues in the industry also, reinsurance capacity was one large issue because there was very little Kaful capacity available. And on the life side also, there's very little Kaful capacity available. That's one of the issues, but that can all be solved as the market size grows. I think SECP has recently allowed non-life industry to use regular reinsurance models where it is necessary and where they need to find the capacity. But I think the overall reason is that everything grows in a society hand in hand. If the industry overall will grow, everything else will also grow. Insurance industry penetration in the past many years has also not grown very strongly. In fact, the Kaful has done slightly better than the conventional insurance. Wherever the Kaful is growing now, I think if the regular insurance is growing on single digit, the Kaful is growing in double digit. Presently we have 11% approximate share, and I think it's going in the right direction. Factors are multiple. First of all, for example, too few dedicated Takaful players. Started 3, 2 couldn't continue. Pak Qatar is holding the flag, thanks to you, Pak Qatar. And then now Salam Takaful has taken over. We have opened the first dedicated Takaful life company. So I think the subject has been discussed many times over. We need to have more capacity in the industry to be able to write more business. So if there are more Takaful players or there's some of the larger ones convert into Takaful, I think that probably will be a way forward. On a micro level, there are plenty of regulatory issues but we have been in discussion with the SECP and they are very, very positive about changing and improving and ease of doing business, and I can see it's part of their strategic plan. So I think the future looks good, but the things take time to mature. I don't want to blame anyone for that matter, but I think everybody is trying. There are about now 7 Takaful windows, regular players. And as the industry and economy grows, the Kaful sector will also grow, inshallah.
Thank you so much, sir. My last question from Mr. Tariq Naseem Saab, Head of the Department of Islamic Finance at SECP. Tariq Saab, would you like to share some of the efforts of SECP on the Islamic finance front, specifically SECP's vision on Islamic finance generally and primarily specifically for Takaful?
Bismillah ar-Rahman ar-Rahim. Presently, our focus is on 2 things. Number one, to bring new Islamic financial institutions, new products, so as to complete the Islamic finance ecosystem in Pakistan. And I think, Alhamdulillah, we are quite successful in this regard, as presently, except for the private equity side, we have Islamic finance in all our regulated sectors. So every segment that we regulate have a component of Islamic finance. So after the historic judgment of Federal Shariat Court last year, what we did was, in January this year, we promulgated regulations and guidelines The guidelines for offering Islamic financial services are non-binding guiding principles-based guidelines that provide and assist every regulated segment of our industries to start converting into Islamic financial institutions. So these guidelines are really helping our regulated persons to transform into full-fledged Islamic financial institutions in a gradual manner. And the most important thing and achievement out of these guidelines were the new fintech businesses that we regulate as NBFC, and their growing interest in the Islamic financial product. So you see, the new fintech are primarily opting for business model that are Sharia compliant, and they are more focusing on the products that are Sharia compliant. We see first certification of NBFC Kist Bazaar as a Sharia compliant company recently, and then we can see many other NBFCs following this suit. Security Investment Bank already converting into a Islamic investment bank in the country. We have seen first certified Sharia compliant REITs in Pakistan during last 2 or 3 months, I guess. Similarly, the fintechs like Finja, Tez, Udan, and other are opting for products that are Sharia compliant, and they are very aggressively working to develop new products to serve the underserved and unserved segments of Pakistani societies. On the regulatory side, we recently in September 2023 promulgated the Sharia Governance Regulations 2023, and that corrected the most important segment of investment side of Islamic financial institutions, that is to bring transparency in Sharia stock screening of the listed securities at Pakistan Stock Exchange. So Takaful operator and other institutional investors now have an investable universe that is more transparent to invest in and to bring value to their stakeholders and shareholders. The point that we are looking now after this Insure Impact Conference is to see the window Takaful operator converting into full-fledged Takaful operator, and then the conventional insurer companies planning to gradually convert into the Takaful general and life insurance companies or Takaful operators. For this, I would recommend them to see the guidelines for offering Islamic financial services approved by the Commission, and then we and the insurance department are there to assist them during this process, and we'll definitely handhold them throughout this process to start making the conversion plans and then implementing them over the period of time to ensure that the Federal Shariat Court judgment is implemented in 5 years in letter and spirit.
Thank you so much, Tariq sir. The second round of question, very brief, very quick, starting from Mufti Shahid Ahmed Ijaz sir. Can you share your perspective on what educational initiatives are essential for improving the understanding and awareness of Islamic finance and especially Takaful principle among the general public?
Basically, I think 3 types of changes are required from educational perspective. The first, overall awareness about capital market and financial institution, because we don't have in-depth understanding. If you go to an engineer or doctor, even a very senior engineer or doctor, they don't know basic idea of finance. So this is the lacking. I think this is the first thing this is required, especially in this age of fintech and the crowdfunding and this type of institutional in-depth penetration. And the second thing, specific education in financial institution, like we have CEIF here, Center of Excellence in Islamic Finance. So similar education in all educational institution. And the third area where we are also developing, and with this help of NIBAF and other institution, that those institutions which are focused on pure religious education. So these institutions, this area of education also required attention from this perspective. So that the educational inclusion is also very important. Awareness inclusion. We are talking generally about the financial inclusion. Obviously, this can be done, but by this thing. So if the awareness is there about basic infrastructure, basic understanding, and also from the basic perspective of Sharia, as mentioned by Brother Umar Ansari Sahab, and from different model of financing, different model of insurance, different possibilities of investment. So then I think it will increase overall awareness and overall knowledge, and the general public, those and basic stakeholders as well.
Thank you so much. Umar Bhai, a question from you. How can international collaboration and standardization contribute to the global growth of the kaful industry, and especially for Pakistan?
It has two different aspects. Number one is standardization with the global standards, and number two is standardization for the Islamic finance standards. Both of the things go side by side to some extent because they extend the benefit to the local industry. So you have better learning, you have streamlining of processes, you have improved HR availability, you have eventual cost savings because of standardized practices. So these are the common benefits that go alongside if you apply international standards either on the conventional side or on the Islamic side. But when we talk about particularly the Islamic finance related standards, particularly those developed by AOFI and IFSB, they have some added advantages. Number one, they actually create a standard which are suited for the industry. That is the fundamental point, because at some point of time, you need to understand that Islamic and conventional are not the same. And those who feel that Islamic and conventional are the same either are at a mistake, because if it was the same, it was never needed. We need to understand that point. If it was the same, it was never needed. There was no need to invent it. It was invented because it was different. Now that mistake can be an honest mistake because of lack of knowledge, or it can be a dishonest mistake, or I would say dishonest fraud, when we try to make fool of people in the name of Islam. That we say that, okay, I'm doing insurance, this is my product called takaful. So anybody who I cannot get into my net directly, I'll get into my net through this offering of product. At AOFI and IFSB, the standard setting process doesn't go that way. It understands fundamentally that these are different products. They have different risk characteristics, different risk profiles, and hence application of the conventional standards as it is to them does not serve the intended purpose.
Thank you so much. My question from Brother Azim. Dr. Ishad gave license to First Islamic Bank in early 2000. And similarly, Takaful came into existence in 2005 when the first few Takaful companies got their license and approval. But we see a huge difference when you talk about Islamic banking and you talk about Islamic insurance. What went wrong?
I don't think anything went wrong per se. If you look at the growth of conventional banking and conventional insurance, there's still a very big gap in the middle. Why is that there? And that is there because our society doesn't feel protection is something that they need. Now, whether they be for the reasons that the Honorable President of Pakistan mentioned, or whether that be for the reasons that Ishad Saab mentioned, that we're teaching to the converted over here. Most people don't even know the benefit of protection. They don't feel they need it. They need banking. Everybody needs banking. And when Pak Qatar started, we actually had a survey done to see why people don't use insurance. And most people, the excuse was it's not halal, it's haram. But when you speak to them, you realize they're doing all kinds of banking. They're doing conventional banking. They're in interest-bearing accounts. So Sharia was the excuse, but it wasn't the actual reason. The actual reason is they don't feel they need it. State Bank, I've given a training on takaful, and I asked people, how many of you have your will ready? And in a group of mid to senior managers of the State Bank of Pakistan, must have been about 30 people there, 3 people raised their hand. जब स्टेट बैंक लेवल पे लोग मरने नहीं वाले हैं तो अवाम उन्नास तो मरेगी ही नहीं. So we don't feel that protection is something that we need, and that's why the gap is there. It has nothing to do with takaful. Just like it has nothing to do with insurance. It's just the fact that they don't feel they need this product. That's why conventional banking is significantly bigger than conventional insurance. Similarly, Islamic banking is significantly bigger than takaful.
Thank you so much for answering this question. My question from Nasser Saab. Nasser Saab, how can digitalization and technology can be leveraged to improve the customer experience in takaful? Especially, would it be any different when you compare it with the conventional insurance companies, or it will be the same for both?
I think there is no question that the world going forward is going to be digital in everything. And both for banking and as well as for insurance, or for that matter, anything else. So it's hard to pinpoint whether it will help takaful more or conventional more, but it will help both of us. As the market size grows, I think everybody will benefit from technology. And for example, we are a new company and we have tried to build a technology platform which can cater to the next 10 years, not for the past 10 years. And I think all my industry colleagues are aware of, and they are working in their respective areas, how to leverage technology to go out. But you see, we have to understand is the fundamental nature of the product. I mean, an Islamic finance, for example, make you opening a bank account, putting your money in is a different product. Committing to a 15 years long policy is a different product. So I think it's the very nature of the product that that's difficult to sell per se. But technology definitely will help. There are no two ways about it. And I am sure the industries, I mean, I come from the typewriter era when we started. It was a manual typewriter. And we have seen the industry has embraced technology. But it's not only in Pakistan. For example, even at the world stage, InsurTech was one of the last technology conversion which happened in the financial industry. But now once they started, I think it has taken off really well. In Pakistan also, all companies are working very hard to develop their technology platform. I think SECP is also very aware of that, and they are coming out with various digital regulations. So I see, yes, it is very important that people use that, and they will use that. And once again, I am an optimist. I believe that our industry has risen to every challenge every time they have been called upon. Be it when I started Al-Falah, I think within first year we had the sad and cruel incident of Ms. Benazir's death, and industry paid every claim. And I think, unfortunately, the perception of the industry, not only in Pakistan, in many countries, is not very positive, despite the fact that for every 100 rupees we collect, we end up paying about 90-95 rupees back in claims. So it's a very low margin, high volume business. So technology, if it can cut cost, it is in our interest to see that we can reduce the cost of distribution.
Thank you so much, Nasser Saab. Tariq Saab, you are the last one in the panel today. So can you share how the regulations impact the growth of takaful? Very quickly.
So quickly, I think I can say that regulating takaful through insurance ordinance is a problematic. And we all know that takaful model is fundamentally different from the insurance model. And this is correct for all the financial services that we regulate. Therefore, I am of the view that we need a primary law to provide support, statutory support, the Islamic financial services that we regulate in Pakistan. Unfortunately, up till now, we have only one Mudarba ordinance as a primary law for Islamic financial services. Otherwise, I think, like Malaysia, we need to have a law somewhat called Islamic Financial Services Law that encompasses all the financial services that we regulate at CCP to provide the statutory report. And then the subsequent and subsidiary legislation can be tailored and synchronized with that primary law to provide a a robust regulatory and legal framework for the Takaful and other Islamic financial services industry in Pakistan.
Thank you so much. With this, we are going to end this first panel discussion. Round of applause for SECP for doing this amazing workshop and conference, and especially to the panelists. Thank you so much. Over to Gibran.
Thank you. Thank you so much to the panelists. I'll request all the panelists to be kindly on stage. We will be distributing the mementos. May I request Honorable Dr. Ishrat Hussain Sahab to say if you could please grace us by presenting shields to our honorable guest, and also request Mustafa Ahmed Lodi Sahab, who was the speaker for the session, to also please come on stage. Thank you so much, sir. Dr. Riyam Sabah. Mufti Irshad Sahab. Umar Mustafa Ansari Sahab, sir, please. Azim Pirani Sahab. Nasrat Samad Qureshi Sahab after this, sir, please. Tariq Naseem Sahab. Thank you so much, sir. Thank you so much, Dr. Saab. Thank you so much to our panelists and speakers. Ladies and gentlemen, we are running a bit forward on time. I'm sorry for that. Can we break for 10 minutes, maybe, please? I'm sorry that's hard. It's been a long session, a long opening session. What I can request is, if you can just grab a cup of tea and coffee and the snacks, and you can come back to your tables so that we can reconvene and we are able to give justice to the next two sessions that we have. So I'll most humbly request all of you to please grab a cup of tea, a cup of coffee along with snacks, and come back on the table, and we will recommence in 10 minutes, please. Thank you so much.
पहले आपने रात को नैन साहबा का लिया था, उसके बाद
Pakistan is home to 240 million aspiring souls, a country with all the requisites to be a major economic player in the region. The nation is continuously striving to accelerate economic growth and catch up to the pace of fast-growing economies. The vast network of motorways and highways spans from Himalayas to the Arabian Sea's shores. We have built the world's largest deep-sea port at the mouth of the Persian Gulf. The world's largest irrigation network has enabled us to be among the top producers of wheat, cotton, and sugarcane globally. Pakistan has steadily been growing as an industrial hub, We are among largest exporters of the sports goods, fruit and vegetables, and textiles. A 73 million vibrant youth bulge offers a huge demographic dividend. The intersection of technology, innovation, and finance is ushering in a new era of financial inclusion, convenience, and accessibility. We are growing and expanding. Sometimes nature disrupts us, be it floods, earthquakes, or pandemics. Every time we rose to the situation bravely. There will always be challenges, but we must keep going to secure our generation's future. Pakistan has a promising future ahead. Insurance is a basic social and financial safety net for individuals, businesses, and communities. The insurance industry in Pakistan has come a long way since its inception. Today, the industry is an important part of the Pakistani economy with a wide range of products and services that cater to the needs of both individuals and businesses. The sector needs to be recognized and navigated to meet the future needs of modern Pakistan. The Securities and Exchange Commission of Pakistan's International Insure Impact Conference is bringing vital insights into the latest global strategies, solutions, and innovations.
Insurance is the best alternative to social security for developing countries. Growth in insurance is needed to make progress towards the government's objective of social security, disaster risk financing, and financial inclusion. I congratulate the Security Exchange Commission for Pakistan for unveiling its 5-year strategic plan.
The insurance industry plays an important role in the financial system, provides compensation for financial risk in the economy. The conference is to revolutionize insurance sector by providing inclusivity, innovation, and resilience through uniting industry leaders, regulators, innovators, and stakeholders.
The SECP, through its 5-year plan, is attempting to increase insurance penetration in Pakistan. One of the goals of the Insure Impact Conference is to secure stakeholder and industry validation of our plan and gain insight from international experts.
In Pakistan, there are 42 insurance companies with a total premium of Rs 552 billion and 10 million active policies. The SECP's studies suggest that there is still huge potential for growth. SECP's diagnostic study on motor insurance in Pakistan revealed that out of 30 million registered vehicles in Pakistan, only 3% are insured. Less than 8 million people have obtained life insurance out of 241 million population. Out of 8 million farmers, below 10% have obtained crop insurance. Out of 32 million registered properties, less than 500,000 properties are insured. The huge untapped market offers a remarkable opportunity. The industry's structural complexities, limited public awareness, lack of quality human resources, and legal constraints pose challenges. With digital innovation and disruptive technologies concerning life digitally, insurers will have to break away from traditional legacy systems.
Our 5-year strategic plan, developed in close consultation with the insurance industry, is focused on overcoming challenges and to align the sector with international standards by 2028. I'm confident that it will be a game changer for all-encompassing growth and progress of the insurance sector.
5 years down the lane, we see a Pakistan which is insured, where the lives are protected, assets are secured, and the businesses have a modern and friendly ecosystem. Our vision is to see Pakistan as a country where insurance contributes to the lives of common people and plays a key role in the development and progress of the country. We have set specific and measurable targets to achieve by 2028. Journey to an insured Pakistan begins. Pakistan is home to 240 million aspiring souls, a country with all the requisites to be a major economic player in the region. The nation is continuously striving to accelerate economic growth and catch up to the pace of fast-growing economies. The vast network of motorways and highways spans from Himalayas to the Arabian Sea's shores. We have built the world's largest deep-sea port at the mouth
Ladies
of
and
the Persian
gentlemen,
Gulf.
may I request those of our esteemed guests who do have their teas and coffees and snacks with them, can you please get to the table and have your seats? May I request all of our guests, especially those who have their snacks and teas, can you please come and be at your seats? We'll be starting in 2-3 minutes. Please, thank you so much. May I kindly request all our guests, at least those who have their coffees, to please kindly take a seat at your table. We'll be commencing in about 2-3 minutes, please. Ladies and gentlemen, may I kindly request to take your seats, please? I'll be extremely grateful to all of you. For those who have their cups of teas as well as coffees and snacks, may I kindly request you please take your seats. Really appreciate it. Thank you so much. Ladies and gentlemen, we are starting the session. I see that many of our guests have this working tea type of an arrangement, which is highly appreciated. Thank you so much. In the best interest of time, may I again request your good selves to please kindly be seated. We'll be starting our session. Ladies and gentlemen, I'll be starting the next session in 2 minutes. I'll again request all of our esteemed guests to please have a seat. Kindly bring your tea and coffee and the snacks at the table. I apologize for this arrangement, but we need to commence so that we are able to conclude the next 2 sessions in time before the lunch break. Ladies and gentlemen, thank you so much for being with us. We now move forward to our next session, which is the post-tea sessions, 2 sessions which would be led by Mr. Falak Sher Haider Somro. Mr. Falak Sher Haider Somro, you met him briefly yesterday at the podium. He is the advisor to the advisor on insurance to the Commission. He is an insurance and actuarial professional with over 16 years of experience working in the Middle East, Malta, and Pakistan's insurance and consulting firms at senior levels. He is a graduate of the Heriot-Watt University, Edinburgh, and a chartered actuary from IFOA. May I please request Mr. Falak Sher Haider Somro to please come on stage and deliver his presentation on insurance pool dynamics and reinsurance renaissance. Thank you so much. A big round of applause for Mr. Falak Sher Somro, please. Thank you.
Bismillah ar-Rahman ar-Rahim. Thank you, Jabran Sahab. Rabbi shrah li sadri yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Respected guests, Umar Sahab, Chairman Akif Sahab, Amir Sahab, and respected commissioners, I welcome you. It gives me a great pleasure to welcome you, of course, with Assalamu alaikum rahmatullah and good morning. I'll be presenting the 2 sessions, so I will take over the moderator role among myself for the ease of convenience, and we are on running on the time. I would commence this session now on the reshaping risk landscape, a comprehensive discussion on insurance pools and reinsurance renaissance. And then after my presentation, I'd be requesting all my panelists to join on this session. So it's good time to begin. The reinsurance pools concept is basically a collective effort for all the companies to jointly participate on certain risks in order to ensure they are within their own which are the risks which are outside their own capacity and beyond their individual insurance appetite. There are 2 concepts, certainly insurance pools and the reinsurance pools which are operated and globally. Given the paucity of time, I'll skip the basic elements and go back to the urgent areas that are important to discuss. Yeah. What's sorry about the glitch. Okay, sorry about that. Right. What? So, नहीं पीछे. Yeah. Yeah. So basically, the overarching objectives of the insurance pools are to have a betterment of the insurance industry and enhancing the protection according to the global practices. Certainly, the emerging economies have very low retentions and they lack the expertise and capacity to underwrite and retain major risks such as catastrophe risk, energy, terrorism, nuclear, and association. Common elements on the insurance pools should be targeted risk coverage, data-driven risk assessment, technology-based solutions, collaborations and partnerships, and capacity building and awareness. The stakeholders of the insurance pools can be government, regulators, insurance industries, and general public. The regulators have an objective to increase the insurance penetration, the solvency and stability of the insurance companies on the market, and growth of the insurance market altogether. The government the insurance pools helps the government to protect the control of outflows of foreign cash flows, reduction in fiscal deficits, and strengthening the economy, placing reliance on local capital and development and protection of the masses. For the industry, direct access to the masses would be reachable, access to better terms and conditions on the reinsurance and local rates, less reliance on international markets, and placements and availability of wider cover. And there is obviously a scope of image building within that. General public, the stakeholders, the insurance protection would be enhanced, awareness would be enhanced, easy access of insurance at lower and affordable rates, and enhanced coverages. These are the quick benefits, drawbacks, challenges, certainly, and opportunities within the risks that within the insurance pools. The benefits includes risk sharing, reduced premiums, coverages expansions, risk mitigation, and financial risk. The risks, and certainly underwriting risk, operational risk, market and liquidity, reputational risks are concerned. Challenges, so insurance pools needs to be controlled through data and data availability. They need to have a good data availability, capacity building, limited capacity capital. Climate change transitions can be brought together in the insurance pools. And we have to reach the marginalized communities as a collective effort through the pools. So looking at just a comparison on the insurance pools, what the commission paper that was produced, it provided a 2004 insurance pools study, which reflected roughly around 97 pools that are operated in 2014. It's a bit outdated, but of course, this reflects that importance of the pools are there. The 53 pools offering insurance and reinsurance pools together, 24 pools offer insurance coverage, and 20 pools only reinsurance coverages. You can see the largest pool, business class, is general liability, fire and other damages, followed by nuclear risks. Some important successful stories on the insurance pools on the agriculture include Tarsim, the Turkish agriculture insurance pool, AgroSeguro, which is the Spanish insurance pools, the Kenya and the Ghana agriculture insurance pools. On the disaster risk finance, some of the representatives from Turkish catastrophe insurance pools are here. Welcome to them, of course. It's the Caribbean Catastrophe Insurance Risk Facility, the Pacific Catastrophe Risk Assessment, and financing initiatives, and African Re. On the nuclear side, we have nuclear liability insurance pools globally operating, along with Mutual Atomic Energy Liability Underwriters Associations. So looking at the insurance schemes, our insurance schemes are quite fragmented. We have within the agriculture sector, the crop loan insurance schemes, which was established in 2008, covering lonely farmers and main only 5 crops, which was discussed earlier in yesterday's presentation. It has a low premium, but the coverage is capped up till 3 times of the premiums. It is funded by Ministry of Finance along with and administered by the State Bank. The second scheme that is running under the agriculture is the livestock insurance schemes for borrowers, launched in 2013, up to coverage of around 5 million on the loan. 4% premium was capped, however, fully subsidized for the small farmers with a cattle size of not more than 10. Punjab Fasal Bima Insurance Program, Area Insurance Index Program started in 2018. The World Bank and the Government of Punjab supported this exercise, and bidding process was conducted for the participation. On the disaster risk, we do not have a particular insurance program at the moment. If I may be wrong, of course, but at the moment, the NDRFS was established in 2016 and with the ADB's loan of around 200 million for Pakistan, responsible for NatCat models, disaster risk financing strategy, including 2 solutions for public assets and crop and microinsurance. Minister of Climate Change and board of directors are responsible for the management. Insurance for public property, we do not have any specific public property asset program, but most of the insurance is covered through a National Insurance Corporation Limited under the Insurance Ordinance Section 166. On the health and schemes, a Sehat Sahulat program covers hospitalization up to 400,000 per life, operated in Punjab, KPK, Islamabad, Central Capital Territories, GB, Azad Jammu and Kashmir, and Tharpaka. State Life currently operates this through the open bidding process managed by Ministry of Health, National Health Services, and respective provincial head departments. In the past, we had an eco pool, which was established in 1975, an integrated reinsurance covering all insurance and retrocession pools between neighboring friendly countries, including Turkey and Iran. Recently, there hasn't been much of a development in this pool, since it has been inactive since past 5-6 years. Pakri was previously managing this, but there haven't been many strong strides on this area. Pakistan SECP took an initiative. SECP took an initiative to cover the insurance pools on the terrorism in the past. These are the following few suggestions. In the interest of time, I want to welcome the speakers. These are the following few suggestions for the proposals of insurance pools. And it is a good idea that if we should try to bring together the agriculture schemes together into a one structure and try to standardize like an international operational structures are happening. That's the end of my presentation. And now I would like to request my panel members to actually join the stage for the next discussion. Beginning with, now I'd like to request CEO Uwais Ansari, CEO Munich Re and Middle East and Africa region. He's a fellow Society of Actuaries of more than 24 years experience. He serves as boards of multiple technology, insurance, and investment management companies. Thank you. Welcome. Next up is Madam Zahra Naqvi, a non-executive director at Chubb. She has been the CEO of Chubb Pakistan and has 35 years of experience in insurance sector. She's a chartered insurer from CIA, a certified director, and an MBA from IBA. Welcome, ma'am. Salim Iqbal Saab, Executive Director, Reinsurance from Adamji Insurance. He has 34 years experience, possessing strong reinsurance market knowledge, and is a fellow chartered insurer and a civil engineer. I'd like to request the moderator, Mr. Moin Foda Saab, who is the chairman of CDC and is an industry stalwart, currently representing SCORE Re in Pakistan, and has more than 40 years experience in this industry. We are also joined by our panelist online, Martin Elton, a senior financial specialist from World Bank. Martin has had experience on working with World Bank disaster risk financing and insurance program. He has worked in South Africa, African region, Pacific regions, including one of the named insurance pools, Pacific Catastrophe Risk Assessment and Financing Initiative for the last 4 years. Welcome, Martin. I'm sure he's online. We'll check with that. Along with him is joined by Sid Miller. He's from New Zealand, works on Aon Reinsurance and Lloyd's and Renaissance Re on sustainable market initiatives, UK government business resilience and insurance development forums, and public-private partnerships to address this. He's a mechanical engineer from Coventry University and MBA from Lancaster University, and awarded OBE in 2003. Welcome to the panelists. I'd like to request this to Mr. Foda Sahab to actually continue with the discussion. Thank you.
Auzu billahi minash shaitanir rajim. Bismillahir Rahmanir Rahim. Thank you, SCCP. My 48 years. Samad Sahab, I'm 2 years behind. 48 years in insurance.
Sorry, sir. I just want to. Sorry about that. I forgot to introduce Suhail Nazir Sahab from EFU General to welcome to the stage.
So, in 48 years, the 25 years that insurance is under SCCP, this is the first ever conference organized by a regulator. They collect the money, but they do not spend. So this is a good initiative, Amir Saab, and mashallah, well done. Thank you very much. The first ever pool that I came across was Federation of Afro-Asian Reinsurance Pool, and that's based in Cairo and managed by Milli Re of Turkey. I've served on the technical board of that pool, followed by ECO pool. The FAIR pool was established in 1964. So pooling dates back to decades. And the ECO pool, unfortunately, when the managership transferred to the PRCL in 2000 or somewhere, it collapsed, and it's now on runoff basis. Having said that, I was just reading material from Malaysia, and there is an excellent paper if you want to read. It's a Re Takaful pool. This morning we've been talking about Re Takaful, and there is a Re Takaful arrangement in Malaysia with regards to the pooling. These are my opening sentences, and ladies and gentlemen, what I like to do is to let my panelists know that I will just have one question to each. And then I plan to open the floor to the participants. And this session commenced at 11:20. So I will take my full 1 hour. And I ask the SCCP team, who has been working very, very hard, and I'd like to give them a round of applause for their efforts, that please come to me with the red tag at 12:19, not at 12:20. Thank you very much. Our panelist, Mr. Ansari, is from Munich Reinsurance. Munich Re used to be here the largest reinsurer, but then they withdrew for some reasons. And Mr. Ansari is based in Dubai now. He's a chief executive of Munich Re for this region. So, sir, my first question is your own experience and Munich Re's experience on the pool, either reinsurance or retrocession. And also, you were talking to me about the rights pool in Africa. I'd like you to share your experience. And if you can confine yourself to 3 minutes, I do have a red tag here, which I can show it to you. Thank you.
Thank you, Moin Saab. Assalamu alaikum. Good morning, everyone. And Moin Saab just told me that he has a red tag. He doesn't want to be served in a red tag, but he wants to serve me a red tag after 3 minutes, which is fine. He's the moderator. First of all, I would like to thank SCCP for arranging such a nice event and bringing all the stakeholders involved in the industry in Pakistan and international players as well to this region. I've been now, since morning yesterday, I've been listening to a lot of engaging presentations and conversations. And a common theme which has been coming across is the challenges that the market over here faces and what can we do to overcome them. I think if we zoom out and if we look at the global situation, the last 2 years post-COVID have not provided a lot of respite to the entire world. We have started, we have conflicts, political and military conflicts that have started and are still continuing. Economic turbulence still persists. We have a situation where the capital markets remain volatile. The inflation has reached highest in the last decades. The state banks have been increasing rates swiftly across the board. And owing to this, you have dampening economic activity globally. So it's not only Pakistan, globally we see this phenomena. Obviously, Pakistan has its own peculiar problems as well, which we've been discussing in detail. But I think overall, the world is facing a difficult time. I think we can all agree that there is no silver bullet solution to the problems that we face. But we can also agree that as an industry, we have an enhanced role at the moment that you can bring in. I think insurance pools is one of the solutions that can be employed in such a scenario where there is not capacity available from international markets or reinsurance providers. Now, being a reinsurance provider myself, representing Munich Re, there are situations where reinsurers decide not to participate, and these are because we can give an example of the pandemic pool that were coming up. Because reinsurers already had enough exposure when the pandemic started. So they didn't want to take the risk, but they still provided services. And that's what reinsurance industry has evolved overall. We are no more a capacity provider. We're a capacity provider, plus we come up with new risk coverages, and the idea is to have services. And these services are what we are promoting globally now. And these services can be structured solutions, these services can be administrative services or management services. If you look at the pool concept as overall, you will see more non-life pools being available globally, and life insurance pools are not there a lot. You have health insurance pools which are there, but not a lot on the life front. Munich Re has been participating in, I think what Moin Saab also mentioned, we have been participating in the South African risk pool, which is called Sarisa. And that was basically created in 1979, and that was the pool which came up after the riots, Soweto riots in 1976. And that's a pool which has a good journey because it started off as a pool of the insurance association that converted into a company thereafter and still persists today. And started off with only the risks of the riots, but widened its scope. If you look in our neighborhood in India, they've got two pools which are quite active. There's the terrorism pool, and we've got the nuclear pool. And both of them are quite sizable pools. The terrorism one is much bigger than the nuclear pool. But what is quite common in both the examples is that all the major industry players are participating. the pools are not left for the small players to be working on. All the major players are part of these pools. Then I think a couple of more examples, short examples, are the commercial cyber risk pool, which was established in Singapore. We have since last year, we have had the floods in Oman. There's a flood pool which has been established over there, which Munich Re is also participating in. But if I look at the Pakistani market, if we look at what is closest to us from our structuring perspective, there is a Philippines disaster insurance pool which exists, which has a similar structure to what we are working over here with. We have got ADB came in to support the Philippines government, where they set up a city pool where the initial seat fund was coming out of ADB, and then the cities pulled in. The management of the pool was comprising of the provincial government's representative in the pool, and there was a reinsurance broker at the pool level, which was looking at the overall pool, administering it, and working with reinsurance providers. That was the most efficient solution. I think that worked quite well. So from my perspective, that's an efficient solution that can work. Also in Pakistan can be replicated.
Thank you very much, Mr. Ansari. It's 1:45 a.m. in Washington, D.C. Martin Lewis is waiting for some time. Martin, thank you very much for joining. World Bank experience on pool success and impediments. You have 3 minutes, sir.
Hi, good morning. I hope you can hear me. Can you hear me?
Yes.
Good morning, Assalamu alaikum, and thank you for inviting me to this conference. Thank you very much to the organizers as well. I'm actually in London, so it's 6:45 a.m. in the morning here. But when I was asked to join this panel, I thought it was very important that we did, because indeed the World Bank has been working on insurance pool for several decades now. And I think there's a couple of types of pools maybe that we can distinguish between. One is that we have supported, this was mentioned in the introduction, the establishment of what we call sovereign risk pools. So we established establishment of pools like the Pacific Catastrophe Risk Insurance Company, or the Caribbean, equivalent, the Caribbean Catastrophe Risk Insurance Facility, where country risk is pooled so that countries have more efficient and hopefully cheaper access to reinsurance markets to insure against major catastrophes like big tropical cyclones or earthquakes. So we have worked a lot on that, but also obviously we have supported the establishment of more national pools, especially also for catastrophe risks, such as actually the Turkish catastrophe insurance pool, and I think they were present yesterday in one of the discussions. But we are providing technical assistance to a number of countries on the establishment and efficient running of these pools. Now, the World Bank is an organization that, our clients are governments, so we support interventions, obviously, where governments see a need to intervene. And why do governments see a need to intervene in something that some people might think, the private sector can perfectly handle itself? Well, there are a lot of market inefficiencies when it comes to the establishment of catastrophe insurance pools, pooling mechanisms. So I think there's often a strong rationale for the public sector to come in and play a role. And in particular, sometimes the legal and regulatory framework needs to be enhanced or needs to be made adequate for pools to function efficiently. So in this area, the World Bank has supported work in the past and is doing so at the moment. There's also a lot of market infrastructure which often is not in place, including risk modeling that often needs to happen. So we have supported risk modeling activities in a number of countries to support the establishment and running of pools. And we would be ready to provide this kind of support in Pakistan if requested, obviously. There's areas around operation management and access to risk capital as well, which often the market is not necessarily providing. So the public sector does intervene, and the World Bank can support it and has supported it in the past. One thing I think we do very well as well is that we bring to bear the best available expertise globally when it comes to these topics. When I was asked to participate in this conference, I was very much aware that my experience mostly with sovereign risk pools, but the World Bank, I think has something to say on this topic. So I thought, how can we mobilize expertise to speak to this topic and provide a really global perspective on the experience with risk pools and also on the experience with wealth and supporting risk pools. So I reached out to my colleagues and asked who could go into with me on this panel and really speak to this experience. And luckily, my colleague Sid Miller agreed to join and provide some remarks on experience that he has, particularly personally, but also that he has with the World Bank on the work on risk pools globally. And as was mentioned in introduction, he has a lot of experience with this topic. He was the former CEO of the New Zealand Earthquake Insurance and has worked with a number of private sector players in this field as well as with the World Bank throughout the years. So with your permission, I will hand over the microphone to him, so to speak, and ask him maybe to come in and reflect a little bit on his experience of working with the bank and also outside of the bank on this topic.
My question to Arthur, please, if you can, when you talk about it, if you can focus on earthquake and the disasters, particularly what has happened in New Zealand, and if there is an insurance role into it. Thank you.
Certainly. Salam alaikum. Good morning, everybody, and thank you for this opportunity to talk with you today. I think going back to what happened in New Zealand, obviously a major catastrophic event. It's effectively was a $12.5 billion event in terms of damage to residential property. The EQC scheme is a first loss scheme which provides cover on a community rating basis to anybody who buys effectively a fire policy to cover their property. So it comes automatically with that. The private insurers actually provide top-up cover on the top of that. For that $12.5 billion event, all the costs were covered by EQC from a mixture of reserves that had been built up in terms of people paying their premium, which go into what's called a natural disaster fund. The fund is obviously invested to earn money. And then the other funding came from the reinsurance industry. And I do want to make a point here. The way, because the scheme looks after the people of New Zealand, we look at it as a very long-term partnership with the reinsurance industry. And therefore, I think there was something like 63 providers of capacity on the scheme when the earthquake occurred. And I think there's probably still about 90% of those are on the scheme. Such is their faith in the scheme, such is the long-term relationship. And obviously they've paid out and they do want to get a return on that. But they have a faith in that. And it creates a trusted relationship. Now, in terms of how it covered that disaster was obviously very successful. But there was some significant lessons learned. The relationship between the private industry, private insurers and the public sector was not as strong as it maybe should have been. And since then, we've developed a model whereby we have actually got a full public-private partnership in terms of how claims are handled. It's much more efficient because the other bit was if you've got two entities trying to settle what is effectively one property, it becomes very difficult to get the resources that you need. And what we learned was, as I'm sure you will have experienced yourselves, resources to settle and address these situations when they occur are in short supply. So you need to be as efficient as possible. And the other bit, which I think was a major learning, and it was very interesting listening to the previous panel, was data and information is very difficult to ascertain and then manage unless you specifically plan using digital technologies to capture the data and be able to use it many times. And that's across both the public and the private sector. So you know how you're progressing with the settlement of claims. You also know the extent of the risk. You also can use that information for building resilience in terms of where you build and how you build. So it plays a major role in terms of public policy. Because obviously the benefits, as we all know, of investing in resilience up front before these events occur is very significant. So they're all aspects where I think you need to think of a pool as bigger than just a pure sort of insurance proposition. It's actually a part of public policy, and it helps educate the public, but it also helps actually look at how you protect communities when those events occur. I think the other point I would just like to make is that there are a lot of costs can occur that you never realised. And so the EQC scheme is an indemnity-based scheme, and that enabled actually the New Zealand government to agree a repair scheme on properties to stop superimposed inflation in the construction industry, which was very important, again, public policy decision, and that was done between the public and the private insurers. But I think the other piece with the advent of parametric insurance, where funds can be released quickly, also has benefits moving forward to cover socio-economic impacts that can occur in these events. And what we're seeing in terms of particularly my work with the World Bank, which is involved in a number of different regions, is that because of these changing products and the knowledge that and experience that we've had from previous events, we're actually able to sort of customize, if you like, different products to actually suit a country's needs in terms of where the highest impact from an economic
Thank you, sir. Thank you.
point of view could be.
Thank you very much. If I was to ask if there is a woman veteran in insurance, then Zahra Naqvi is the one. For decades here in the insurance industry, her rich experience. She's non-executive director at the Chubb. And Madam Naqvi, I know that Chubb helps, or Chubb sees agriculture as also one of the strong area. And I like your views on the pool, particularly the crop insurance and the agriculture, and what Chubb's experience has been. Thank you.
Thank you, Winsam. Thank you, SCCP, for arranging this. Well, we've heard so far the reinsurer's perspective on in various jurisdictions. Chubb is mainly a direct writing company, and we are the world's largest property and casualty insurer, present in 54 jurisdictions. So we have a lot of, data and information across the globe. One thing that our company really, that's the underlying thing, we are an underwriting company. So whatever we take to our books is well thought out, well, assessed, and then written. So when we say this, really, it comes down to availability of data, sound and credible data, structures around the market, and risks that can be assessed on merit. In terms of your specific question, yes, we have different companies within us, and one of them is one by the name of Rain and Hail, which is basically active in the US. It works with with their state governments to provide coverage for crops. That's something that a few years back, I think NIC also wanted to talk to us about, and we did connect them to our relevant people. I think the challenges in our market, not only in this sector, but generally, is data. We do not have credible data, and that is at the key of, I think, one of the impediments in our development and to bringing our market at par with international standards. Not only does it limit our market's ability to kind of venture into new risks, it also increases the cost of our products to our general public. So this is an area, I think, which we need to kind of work on, work closely with other sectors, and try and kind of really develop this field and try to emphasize the importance of this in our interactions with the market, with our potential areas of development. And so I think that sits at the key. In terms of the proposed pool that we're talking about, I think, again, we need the magnitude of the risk that we are trying to look at is significant. We're talking about covering catastrophes. In reference to the market size that we have right now, it's not even $1 billion US. It's a very small market. Any pool that we have to see the size of the pool, the financial strength rating of the pool, what are we going to get in terms of our retrocessions from there, the quality of the security that we'll be able to offer, and those are aspects that we need to work on. In our present market already has a state reinsurer, wherein at one time there was a compulsory cession on direct. They still have the first right of refusal on every reinsurance contract. They've been the managers of one of the regional pools. I believe that hasn't been done too efficiently, but it's a vehicle that already exists. So there's a need to look at what we have at present, see if we can mobilize those effectively, and then look at options of, creating a new entity if that's a requirement. Basically, that's really.
Thank you very much.
Thank you.
Mr. Salim Iqbal is the Executive Director at the Adamji Insurance, a rich experience in reinsurance. Sir, there has been a move in 2010 and particularly after 9/11 to create a terrorism pool. And I recall that at that time, ADB was willing to give a loan to the GOP or a guarantee of $100 million. But unfortunately, with differences within the market, that pool could not take off. Today also, many of the smaller and medium-sized companies are suffering from capacity on terrorism. Your views on this area particularly?
Bismillahir Rahmanir Rahim. Assalamu alaikum to all. Thank you, Moin Saab. Thank you, Mr. Falak Somro, for your nice presentation, and thank you, SCCP, for organizing this good conference. In my opinion, insurance and reinsurance pools are very effective in handling those classes of business which are hazardous in nature and which are less desirable by the insurance and reinsurance companies, and for which reinsurance support is also not available. So terrorism, yes, it is hazardous in nature, but is it less desirable for the insurance company? I think the answer is negative, because I can say from the experience of my company, I think it is true for the rest of the market that terrorism insurance is the most profitable line of business to the companies. So, at the moment, most of the companies, particularly larger insurance companies and medium-sized companies, even in smaller companies, to the best of my knowledge, they have reinsurance, automatic reinsurance facilities in the form of treaties, quota share and surplus. And so when reinsurance capacities are available and a class of business is desirable for an insurance company, so it is difficult for the company to enter into a pool. As you have rightly mentioned, in 2010, there was an initiative, I think, by SCCP, and there was an international broker who was pitching for a reinsurance pool. But larger insurance company at that time, they were the actually, and we at Adamji Insurance also opposed this idea because we thought that we have got the insurance capacity. The insurance capacity, we have got treaty facilities even at that time, and also, I mean, if something is out of the scope of the treaty facilities, there are facultative markets available for the protection of the terrorism insurance policy. But this is true for conventional lines of business. But it is not the case for takaful terrorism policies. There has been recently a great demand for even for takaful insurance policies, and initially I think for 2 years we do have a smaller re-takaful treaty facility as well. But there was only one player, one consortium of large syndicates that were providing that takaful or Sharia compliant for support. But unfortunately, due to a reason known to me, they have withdrawn, and I think at the moment there are no insurance company which has got a automatic treaty facility for writing, for protecting terrorism, takaful insurance, takaful policies. So I think, coming back to your question, larger insurance, whether they will support their terrorism, I think they may not support it. But for re-takaful, if insurance companies can pool their resources and can agree and with the assistance of SECP and some legislation, relevant legislation, if a pool can be established for writing and protecting the terrorism takaful policies, then that will be feasible.
Thank you, sir. Thank you very much. Mr. Suhail Nazir, either the pool should be mandatory, participation, tariff, modes of pool, whether it has to be a specialized company or a Section 42 company. Your views on that?
Assalamu alaikum. Thank you, Moin Saab, and thank you, SECP, for making me part of this prestigious forum. Before I just move on to answer your question, I think there are two basic things that we need to understand. Number one is that we are operating in a very small non-life insurance market, where the penetration is hardly 0.89%, and the premium that we generate on a yearly basis is between 700 to 800 million. Second is that regarding the legislation, there is no provision in the insurance ordinance with regard to pools. Now, how to move forward? One way is that legislation should be done. Then obviously it's a lengthy process, as we all know. Second, keeping in view the small market we have, it has to be mandatory so that all the market players must be part of that pool. Otherwise, it won't be effective. There will be capacity issues, there will be fundraising issues, and blah, blah. So what's the way out? It has to be mandatory. There is no provision in the law. One way out, what I see is that SECP uses its power under the SECP Act to bring the companies to the pool, making it mandatory. But then the elephant in the room is the competition ordinance that bars and prohibits companies cannot be forced into any kind of collective arrangement. So it has to be mandatory. Law is not there. So if SECP uses its powers, then obviously competition ordinance comes into being. So I think the best way out is that it has to be involuntary, but SECP should conduct and held extensive consultation with the industry to make them understand and convince them to come to the pool. That is one way out. Now, the question is that how it should be formed. Will it be an insurance company under the statute? Is it going to be a trust? Is it going to be a not-for-profit organization or an SPV, special purpose vehicle? When again we talk of forming a company, then again going back to the National Assembly and the Senate and a time-taking exercise. For trusts, I don't know, but whether it will be lucrative for the participants to be part of the trust when they won't be getting anything out of it. Thirdly, not-for-profit, again the same question. Why to be part of that party when these are all commercial enterprises being formed to generate profits for themselves, for their shareholders? And SPV, I don't know, memorandum of agreement would be a challenge in that case. So for me, I think there has to be a two-pronged strategy. One should be a long-term and the other one is a short-term. In the short term, either of the three, I mean, being a trust or the not-for-profit or SPV can be exercised. In the long term, it has to be a company under the statute.
Thank you. Thank you very much. Why I said thank you and interrupted you, apologies, because the organizers gave me a warning and they curtailed my session by 7 minutes. So I have a clock ticking here, which says 2 minutes and 32 seconds left. So I'm afraid I will not be able to ask the audience to take the question, but I'd like to suggest to the insurance industry, the players here, if you want the pool to be established, then the Insurance Association of Pakistan should take a lead, form a focus group, and look at it. Pool is not only to strengthen the capacity, but to curtail the outflow of reinsurance premium. And that is something which this country needs desperately, to collectively pool your resources, either in takaful or terrorism, as Salim Iqbal Sahab said, and some of the veterans and industry leaders should form a focus group and then make an approach to the SSCP as what they would like. Amir Sahab, may I say that, Dr. Ishrat Hussain talks about this conference and the implementation, as you know, is key. SSCP, in my view, has done a great job in organizing this conference. But I know that at the end, you will have a concluding session. My own experience, if I can just divert from this pool, which I have entrusted the task to the IAP, for this conference to succeed, I suggest that Insurance Association of Pakistan makes a focus group of key people in each area. They interact regularly with the SSCP, and a monthly meeting of the stakeholders with the SSCP, with Commissioner, a quarterly meeting with the chairman of the SSCP, and because insurance is sandwiched between the Commerce and the Finance, the additional secretary or Commerce secretary to join the meeting. And we should make an annual feature here of this conference to be organized by the private sector, where the two ministers, the Commerce and the Finance, they should come in. And maybe every 3 years, we should have an international conference. But the plan of 5 years, strategic plan that you have laid out, Amir Saab, to see that it really succeeds, is to take a quarterly count of your achievements and then make sure that the industry players play a role. This conference has been very successful because conferences can be judged by the second day of the participation. And today, mashallah, is a full house. So again, thank you very much. Round of applause to the SSCP and the participants yourself. Thank you. Thank you for our two participants also from London and from New Zealand, of which I am the Honorary Consul General for last 3 decades. Thank you.
Thank you so much, Moin Saab. Sir, apologies for cutting on the time. but we are just running short. I would like to request Mr. Umar Murshid, he needs no introduction in my opinion, to please come on stage, to please deliver, to please hand over the shields to the panelists and the speakers for the session. Thank you so much, Umar sir. May I please request Madam Zahra Naqvi to please first receive the shield from Mr. Umar Murshid. Mr. Moin Khuda Saab, sir, please. Mr. Awais Ansari Saab, sir. Sir, Falak Sumru Saab has his own. Mr. Sohail Nazir Saab. Mr. Salim Iqbal Saab. And thank you very much to our online guests as well. Sir, may I kindly request all of you to also have a group photograph, please. A big round of applause, please. Thank you so much to all our speakers and panelists for the session on reinsurance and insurance pool dynamics. I'll just be quickly moving on to the next session, which is about standards, international standards. Embracing international standards, charting the course for IFRS and RBC. I would like to request the speakers for the session to please come on stage. I'll firstly request Mr. Falak Sher Haider Sumro to please come on stage. I have already introduced him in the previous session. He is the advisor to on insurance to the Commission. I'll then request Mr. Umar Murshid, who is the CEO of Siddharth Haider Murshid Associates, is an actuary as well as a chartered accountant, and has almost 49 years of experience in UK, Pakistan, and throughout the Middle East. I'll now request Mr. Sarwar Girami, who is a fellow from the Society of Actuaries and who has over 20 years of experience. He is currently the chief actuary at the Insurance Authority at the KSA, the Saudi regulator for the insurance. Sarwar Girami Saab has joined us all the way from Saudi Arabia. A big round of applause for Sarwar Girami for being here with us. I would now like to call Mr. Farokh Rahman. Mr. Farokh Rahman is a fellow member of the ICAP. He is a partner of A. Ferguson and Chartered Accountants. He is also the elected member of the Council of ICAP. He is also the chairman of the Accounting Standards Board and member of the Accounting Standards Committee of the South Asian Federation of Accountants. Thank you so much. Farokh Rahman sir, please a big round of applause for all of the panelists. And lastly, I'll be calling upon Mr. Osama Dhangra. Mr. Osama Dhangra is currently the president of the Pakistan Society of Actuaries. He's a fellow of the Pakistan Society of Actuaries, a fellow of the Society of Actuaries, and a chartered enterprise risk analyst. Osama has over 10 years of actuarial consulting experience with companies in UAE, KSA, Oman, and Pakistan. I'll just be briefly stating the schedule in terms of because we have presentations. So first would be Mr. Falak Sher Sumro would be speaking first, giving his presentation. And then he will be followed by Mr. Sarwar Girami. Then I'll request Mr. Umar Murshid to please come up on the stage. After that, Mr. Farokh Rahman, and in the end, Mr. Osama Dhangra. I'll request you gentlemen to, instead of me coming on the stage, I'll just request you to please switch the gaze yourself, maybe. Thank you so much, sir. Thank you so much, everyone.
Well, thank you, Jabran sir, once again. Of course, we are running behind the time that we are supposed to, so I'm just going to cut down my presentation and keep it crisp, just to touch base on the rationales and the purpose of the IFR 17 and the RBC initiatives that are being done by Pakistan Securities and Exchange Commission. Wonderful, thank you, Sarwar Saab, Omar Saab, Farooq Saab, and Sama Saab to be part of this session. Want to give more time to all of you, so let's begin with that. The Securities and Exchange Commission, we had the ICAP working committee, which developed a working group for IFRS 17 in 2017 and 2019. Unfortunately, due to COVID, we were not able to set out the plans for the IFRS 17. Much of the action started working in 2021, where in June 2015, we started with the circular on IFRS 17, defining a four-phased approach. The first approach, of course, was to have a gap assessment on the IFRS 17, conducting a gap assessment reports towards September. The second phase was basically the financial impact assessment, which covered the financial impact assessment for life and general companies separately. Roughly around 9.8 billion PKR of the impact on the equity was reflected for life companies, and roughly around 400 million PKR impact was reflected on equities for the non-life companies. The SECP recently, continuing its strides, would introduce the IFRS 17 Phase 3 requirements, which covered system design and methodology requirements. And we are trying to aspire towards IFRS 17 completion for 2026, 1st of January, setting out the phase once the phase 3, setting out the phase 4 once the phase 3 completes. If you can see in the small table there, we are running behind the schedule. Certainly, there's lots of international focus on these standards. The Saudi Arabia, United Arab Emirates, Oman, Malaysia, Qatar, they introduced their standards in 2023, followed by in 2024 we have, Egypt, Jordan, and the next subsequent years, some of the countries have not. Sorry, my eyesight is a little blurry. That's why I'm not able to. So these are the statuses on the IFRS 17 on the development side. Certainly, the IFRS 17 standard would bring lots of consistency, transparency, and compatibility with the statements between insurance companies and the non-insurance companies. Yeah, so on the RBC front, let me just go back with my presentation. So on the RBC front, basically, we planned up an implementation on the RBC with the industry consultation after 1 year from the IFRS 17 implementation. The Commission has prepared responses in the recent time. They prepared a concept paper in 2019 with support from Pakistan Society of Actuaries, and there was an industry feedback received in the start of this month regarding the developments on the IFRS 17 and their suggestions regarding developments on the RBC and their suggestions on the factors. Work is being conducted on the actual valuations for insurance contract assets and liabilities to bring align the consistent approach for the RBC as well as the IFRS 17. And certainly, as we can all know, that we would be preferring to hold a phased approach for RBC compliance in the future date. That's a little bit about my presentation. I would like to request Sarwar Grami Saab to continue with this presentation. Thank you.
Forward, yeah. Okay.
Assalamu alaikum and good afternoon, everyone. It's an honor to be here. Thank you to the Securities and Exchange Commission of Pakistan for inviting us. I almost had goosebumps singing the national anthem after a very long time. Our IFRS 17 journey is regarded globally and has been appreciated and has been followed by many jurisdictions. And the good news is that the actuaries in Pakistan, they have contributed heavily towards that journey. So thank you to Shama Consultancy and the team under the leadership of Omar Murshid and Badri Consultancy under the leadership of Hatim Maskawala, as well as Milliman under the leadership of Asad Irshad. How we made it happen? It wasn't achieved in isolation. We created an ecosystem of strong actuarial input in every technical sphere of an insurance company. We rolled out actuarial work rules in 2020, under which an appointed actuary reports directly to senior management and board of directors in the core technical areas: pricing, where he's responsible for producing technical reports, recommending actuarial premiums for at least motor, health, and life insurance business. On the reserving front, where IFRS 17 also sits, they are required to report on a quarterly basis to management and, of course, to the regulator, well supported by adequate studies, expense analysis, mortality and morbidity exercises, as well as persistency analysis for life business. At the same time, an actuary is required to work out the capital and solvency and numbers for the company in line with the risk profile, and we will talk more about it. On the reinsurance front, where in the P&C sector, more than 90% of the business gets reinsured in Saudi Arabia, we got appointed actuaries involved to work out what the most optimal reinsurance arrangement for the company is, so that when reinsurer manager goes out and negotiates with reinsurers, they negotiate from an informed position. Likewise, on the investment side, we have required appointed actuaries to perform asset liability management. So in total, an appointed actuary is required to submit at least 15 reports to the board of directors and senior management, and of course, to the regulator. In the insurance authority, all of these reports get reviewed, challenged, and then we provide feedback to the sector in the form of what we call as Dear CEO letters, addressed directly to the top management of insurance companies. Our last Dear CEO letter that we issued was 57 pages long. Now, moving to IFRS 17 implementation in this ecosystem, this standard was published in 2017, as all of you know, but there was a lot of debate around various areas, and there were apprehensions that it would change significantly. However, we did not wait for those changes, which were finally transpired in 2019, and we rolled out our four-phase approach, very similar to what Falak mentioned you are planning to do here. Gap analysis, financial impact assessment, design, and implementation. The most important phase was phase 4, where we had performed 3 dry run exercises. And after each of these phases, we provided feedback to the sector in the form of Dear CEO letters, so that you know what the regulator is thinking and what other companies are thinking, promoting market best practices. Also, do not forget that together with IFRS 17, you also have to implement IFRS 9. Okay. And just like IFRS 17, we provided feedback to the sector on IFRS 9 so that they can enhance and improve their methodology. By the time IFRS 17 went live, we had performed 3 dry run exercises under IFRS 17 and 2 dry run exercises under IFRS 9, which proved to be extremely helpful in removing any mysteries around the expected impact of transition to these new standards. Now we are in the BAU state, and under that, we are not taking our feet off the pedal. We have created a steering committee within the Insurance Authority, and there are 8 work streams working in various areas, updating the regulatory reporting forms, updating the RBC regime, and so on. During this 2023, we have produced 3 quarterly financial statements. For the first one, we did give some extension, and you as a SECP may need to think about it because you have to produce the transition balance sheet as well as the opening balance sheet for 2026 in your case. But since then, Q2 and Q3 have been on time, and now we are fairly confident that the year-end financial statement would be produced in a hassle-free manner. Together with these, during this entire journey, we carried out and held similar sessions similar to what we are doing today. And we did 7 of those. We interacted with the industry 7 times during this journey. And in one of these sessions, which was virtual, we had 400 participants from 22 countries around the globe. One thing I should also emphasize is the heavy contribution from the IFRS 17 working group of Saudi Arabia, in which many from Pakistan also participated. And what is important from these working groups, they should not just be discussion forums. What worked for us, that those were output forums. We rolled out many invaluable outputs from those forums for adoption by the sector. The question remains, okay, so what happens once we adopt IFRS 17? I can't see it on the screen. Now I can see it. So for those of you with an actuarial background, what this graph is showing is the interquartile range, or in simple terms, where the concentration of companies was after each of the dry run exercises. So the impact on equity compared to IFRS 4. The red line in the middle suggests that if you are below, then your equity has taken a hit. If you are above, then it means your equity has benefited from transitioning to IFRS 17. In the first dry run, you would see there is a significant portion of companies which projected that we will benefit from IFRS 17. That changed significantly in the second dry run exercise because of the challenge from the regulator. The second dry run exercise was also audited, plus implementation of IFRS 9 and the ECL impact. Moreover, the business environment changed as well. The onerosity of contracts had a significant impact. Now, in the third dry run exercise, there's a very large proportion of companies which anticipated that IFRS 17 would have a negative impact on their equity. Important thing to understand that IFRS 17 does not change the dynamics of an insurance contract. Rather, it changes the timing of the emergence of profit. Between life insurance and non-life insurance companies, you can see that on the bar on the left-hand side shows that non-life insurance companies took a bigger hit under IFRS 17, mainly because of the onerosity and the competition in the Saudi market. In terms of the impact of audit, please do not underestimate the influence that auditors can have. We got the second dry run audited. Look at the difference in the 2 bars. One is pre-audit, the other one is post-audit for the same dry run exercise. You can see that the proportion that was well above the 0% line, which means positives, reduced significantly. So auditors did have a significant impact, and the important thing was to get them involved early in this journey. Many of you who are from the finance profession, you know how sensitive a qualified opinion can be for company management. We encourage companies and said it's okay to get a qualified opinion during the dry run exercise so that you can fix it while IFRS 17 has not gone live. And look at this, the 50% of or more of companies got a qualified opinion in the Saudi market after dry run 2. In terms of margin and reserves, many of you might be holding management margin. This will be replaced by risk adjustment. And you can see that the impact of risk adjustment is significantly much more than what we had in our market as a management margin. Many of you might be holding PDR if you anticipate your business to be loss-making. However, the impact of IFRS 17 was much more simply because you are unable to offset your loss-making contracts with your profitable contracts. That is another source of strain on your initial equity. In terms of attribution of expenses, while we have managed to narrow down this range significantly in the Saudi market, this is still an area where we believe the regulator has to keep a very close eye on, simply because this can be easily used to determine whether a contract is onerous or not. Now, in terms of our own supervision, we were very transparent in informing companies which ones we are satisfied with, which ones we are partially satisfied with, but the companies that we had severe concerns about, and we followed up diligently with those companies. Now, in terms of the success factors, what we call as, so we had a clear objective from Insurance Authority Management, timely and smooth adoption, and we religiously adhered to it. We had some whispering in the market when IASB delayed IFRS 17 implementation, and then there were some noises, perhaps we should take our feet off the pedal. What we did, we added one more dry run exercise to make sure that we do not lose the momentum. So COVID had no impact on our IFRS 17 journey. We adopted a consultative approach rather than a prescriptive one. So Dr. Hussain mentioned that whenever something is new, make sure that you work as partners. And it worked very well for us in the form of IFRS 17 working group. We had robust monitoring. So we even interviewed board members of insurance companies to assess their knowledge of IFRS 17, get them involved early on. We took a hands-on approach ourselves. The fonts are very small there. We took a hands-on approach ourselves. We built our own IFRS 17 model. That gave us the credibility in front of the sector. When we challenged them, they knew that we were coming from an informed position. And as we said, avoid late surprises. Make sure that you get your auditors involved early on so that you have time to respond. Now, in terms of the challenges, we talked about expense attribution. This is an area where the sector would need to work very closely to make sure that entire sector is working in some form of consistency. Otherwise, it can lead to significantly diverging results. Onerosity determination, make sure that there is policy around it within every insurance company. Investor education would be important. Make sure that your investors, the stock market, does not interpret the reduction in equity as something negative. Make sure that they understand that this is all about timing differences. You would have to develop your own KPIs. The loss ratio definition, combined ratio definition is going to change. Make sure you work on those. Solvency calculation, I'll talk about it in a second. One thing I must draw your attention to is vendor models. Every insurance company in Saudi Arabia bought a vendor model for implementation of IFRS 17. What they did not anticipate that these vendor models were new for everyone. They had not been tested anywhere before, and there were significant challenges. So make sure that you have understood your own requirements first before you agree on a particular model. In terms of the risk-based capital journey, we have taken a phased approach. I like to use the word phased. That's exactly what we did. We started with stress and scenario testing in market risk, underwriting risk, and counterparty default risk. And the idea behind that this number should not be a regulatory compliance number, but there should be buy-in from management. An example of this, when we ran this, flood risk turned out to be the biggest risk in our sector, gross of reinsurance. On a net of reinsurance basis, this changed from the first position to the 6th position. That showed management the importance of having adequate flood risk protection within your reinsurance treaties. Where we are now with RBC, what we call is indicative RBC. Those of you familiar with the Solvency II, you know that there were 5 runs before Solvency II became live. We have performed 2 runs of this indicative RBC. We are planning a 3rd run in 2024, after which the rollout decision will be made. It is very similar to Solvency II. However, the big plus is that we have calibrated it to our own experience so that we can justify that it reflects the Saudi market's experience and the risk profile. In terms of the numbers, what we have seen, as you would expect from any risk-based capital regime, the bar on the box on the right-hand side is the current solvency margin, whereas the one on the left-hand side is bigger, which suggests that a risk-based solvency regime responds more to the risk profile of the company. But at the same time, you can see that red line goes above some insurance companies. So that also indicates that some insurance companies will have to raise additional capital. In terms of our risk, the biggest risk is non-life underwriting risk, given that the 97% of the market is still non-life and health insurance. We are pushing for increase in life insurance as well. Important thing is to notice the diversification benefit. And this is where it becomes more strategic rather than a number calculated by actuaries. What I mean by this is the next slide. You can see this is the diversification benefit being achieved by various insurance companies. So in market risk, a CFO, through their diverse investment strategy, managed to reduce their market risk capital by around 30%, whereas another CFO is sitting at very close to 0% because there is no diversification. Likewise, on reinsurance, a reinsurance manager managed to reduce their counterparty default risk capital by in excess of 40%, whereas another one, probably concentrated in one reinsurer only, had almost a 0% diversification. Likewise, on premium and reserve risk, you see similar story. Those companies which have got a very well-balanced, diversified book are able to have a significant diversification benefit for their books for both premium and reserve risk. So important thing is that a risk-based capital, yes, it does increase markets' resilience, but it can also be a very good source of embedding risk culture within an insurance company. Thank you.
So, I said I must say, as Sabra kindly mentioned, we've been working with him in Saudi Arabia, and the experience, last 5-6 years experience I've had as a professional actuary working in Saudi Arabia, have been one of the most enjoyable years of my life. So it's thank you to Sabra for making that happen. We also work in other jurisdictions, and I just wanted, I've skipped my slides to try and cut the time down. to bring some things to what to do right and what not to do. So we work across the GCC. Now, IFRS 17 came live across the GCC on the 1st of January 23, right? Everybody had this four-phase type approach, but some of the other regulators didn't take it quite so seriously in such a structured manner as was done in Saudi Arabia. As a result, what happened, although they've gone live and companies have produced what we call IFRS 17 compliance statements, there have been a lot of shortcuts. To this extent that last week, the UAE regulator had an annual meeting where it briefs actuaries and auditors, and they admitted that this year of 2023, these companies are actually trying to get it right. They're trying to recalibrate the model to produce the right figures. Because what a lot of companies did, it took the IFRS 4 numbers and made very high-level adjustments to produce IFRS 17 standards, and the audit profession obviously went along with it. So that's something we do not want to do as an industry. Now, well, thank you first to the SECP for finally issuing the circular for phase 3 design for IFRS 17. That's very useful. I would just want to say something to everyone. I know the insurance industry in general is apprehensive about how much work, whether we have people and so software and so on. So just a few things. If you do it in a structured way, I think I'll ask Sarwar to confirm that. If you do it in a structured way, we have till 1st January 2026. It's more than enough time to actually get this right? An important part, which I think Sarwar also indicated too, you can do all the training you want in the world in theory. What you learn from the actual implementation, which is what the dry runs were, is absolutely invaluable. That's really when you get your hands dirty and you start understanding what's happened. Now, that's something in the working group's recommendation to the SECP, I think we've also proposed three dry runs, right? And that's not in the circular, but obviously we'll see how it goes. But that's two other things I just thought I would mention on. So two challenges. One Sarwar mentioned is the software, right? You have, luckily, we've come a little few years later, which means all the software that's been around and was being tested in Saudi Arabia and Europe and the likes has now been tested. So we have working software available. What we also have available, Sarwar mentioned 3 firms' names. All of these firms have working software-related experience. So you not only have software, but more importantly, you have, for firms working in Pakistan, the ability to use that software, which is, again, invaluable, right? To have software is one thing, to be able to use it successfully is something different. So that risk for us is something, and the SECB rightly in a circular decided that it is the design stage at which you have to select the software, right? If you start doing it post-design, that's too late. You can't do that. So to make sure that the software is available and working and suitable to your business at the design stage is very, very important. So that, thank you for including that in the circular. Lastly is something which, unfortunately, is something we've faced with as a country, which is the lack of people, right? We are, unfortunately, a very successful exporter of actuaries, right? Not a lot of them stay in our country. That's sad for us, right? But what we've got right, alhamdulillah, as a country is that we keep training people. We keep hiring, keep training, and hopefully, alhamdulillah, actuaries keep qualifying, which is great, right? I would suggest that, that if we start waiting, that we'll have enough resources to implement IFRS 17. I know the person we've trained has gone up and left. There's obviously as simple as a normal resource planning problem. One is that you always have redundancy. Train more people than you need, right? Because they will leave, and you should have somebody in place. So that's one. And just keep hiring and training, right? This is something that we have to do, not just for IFRS 17, but I believe for many more areas. I think the RBC regime itself will prove a real challenge for Pakistan when we come to it, because Sarwar mentioned that Saudi Arabia was a very structured market by the time RBC or IFRS 17 came. We, unfortunately, in terms of our reserving or actuarial practices and accounting, we're a little behind, right? But we produce probably the best accountants and actuaries in the world, and I really believe that, right? So, why should we not be able to do that? So just make sure that we hire and put enough resources there, train them adequately, and provide for redundancy. And inshallah, even the resource challenge we will overcome. Yeah, thank you.
Bismillah ar-Rahman Rahim. Assalamu alaikum. All, first of all, let me thank SSCP for inviting me to this conference and speaking at this session. IFRS 17, very recently, SSCP has notified, has been referred to by Umar Murshid Saab. This notification, the ultimate culmination was through this working group, which we formed at the Institute of Chartered Accountants of Pakistan by the Accounting Standards Board. And I'm very grateful to Umar Murshid Saab for leading this, this whole implementation working group for IFRS 17. So quickly moving on to the subject, IFRS 17 is at a stage where I would like all the CEOs, CFOs, others sitting here, even the regulator, that from the recording and the recognition of the insurance transactions to have insight in your mind, the ultimate reporting. Because at the end of the day, it is going to be the financial statements that are going to come out and which will be used by everyone, all the stakeholders. So my attention is more towards, of course, everything, you know, the transactions are recorded and then coming and being presented in the form of financial statements. So for IFRS 19, IFRS 17, the first and foremost thing that everybody needs to understand is that though the applicability date has been January 1, 2026 in Pakistan, but the standard requires restatement. So there will be a comparative in the profit and loss account. That means that effectively the transaction goes public, or you have to reflect those in your financial statement, the comparative number as well. So that means from January 1 to 2025, the numbers are also going to be presented. So that is something very, very important that you need to understand, because there will be not at the end of the year, there will be an annual report, but also there will be a quarterly report that is going to come out. So the comparative number, that is something that we need to understand. Here, one technical point I want to highlight is that though there will be restatement, there will be this comparative coming, but there is no very specific requirement, or there is no mandate in the standard to have your third profit and loss account being reflected on the profit and loss account with restated numbers. So you can continue to have those presented if you opt to present at the third balance sheet or the third profit and loss account. So there is no requirement, but if you are not restating those numbers, then it is a requirement to disclose and show in the financial statements. So together with this restatement of number coming out of IFRS 17, Mr. Savar also mentioned to the IFRS 9. I'll cover a little bit in detail in the subsequent slide, but this restatement context will also be relevant for IFRS 9. Now, one of the first, I would say, in my approach, and I would suggest you all to focus on is how you transition to IFRS 17. And one of the first decisions over there would be the approaches that you need to select in terms of how you are going to present or recalculate your number. There are three approaches given. One is the full retrospective. That means that you have to go day one, everything is available as if IFRS 17 was implemented for all those contracts day one. That is the I would say mandatory kind of approach. But if it is impractical to adopt this full restatement approach, then there is this option of going to the modified retrospective application as well as the fair value. So there are further technicalities to it. I'm giving the amount of time. I'm not going to get into this, but you need to understand that for particularly for life insurance companies, this is going to be a very, very significant decision right at the start when you start transitioning to IFRS 17 implementation. As I mentioned about IFRS 9, IFRS 9 was notified in Pakistan. It was applicable. But within the IFRS 4 and IFRS 17, this option was given that you can defer, or you can take this exemption of applying the IFRS 9 first time along with IFRS 17. So the time has come where, to the best of my information, every insurance company took that exemption route, and now with IFRS 17, IFRS 17 in itself is a complex, is a technical, quite a technical standard. But having the taste of IFRS 9, you will also going to experience some new things. So in that, what is important for me to highlight is that IFRS 9, unlike IFRS 17, which mandates restatement, IFRS 9 does not mandate restatement. Not restating has some impact, and if you opt to restate, it has some accounting impact. So that is again one point that I want to highlight. If you are not restating, that means there could be some accounting mismatches, and that specifically again for life insurance companies, you need to be careful in that. In case, as I said, if you are not restating, then the impact on the date of the first initial application, the difference between the two will go to the equity, not in the P&L. Quickly moving on to the other important areas. Each one of them requires probably hours of discussion, but I'll only touch upon very high level important matters and considerations for the implementation of IFRS 17. The first being you need to select certain measurement models, and this selection again depend upon the specific products, the specific line of business that you have. There are three, I'm just highlighting quickly: the journal model, the VFA, the variable fee approach. And for general insurance, most of the general insurance, it is going to be, or where there are short-term contracts, the premium allocation approach, PAA. So that is something I think most of those who are aware of the IFRS 17. These are the measurement models. Again, you have to take early decision making to which groups, to which portfolios, which particular measure models are to be adopted. Again, IFRS 17 require, in fact, every accounting policy that links to the insurance that needs to be redrafted, rewritten. A lot of decision making is required at the level of the companies. I think CFOs specifically take note of that. Already the financial statements are quite thick. There's a long narrative disclosure that comes in the financial statements. But for IFRS 17, again, you need to be focused on to that needs to be rewritten. See this flag here. So I can quickly moving on to the other important aspects for life insurance companies. As I said, the decision making that companies require in terms of presenting or implementing the IFRS 17 fulfillment cash flows. Again, there's a definition of fulfillment cash flows. I'm not going into that, but for that, there has to be a contract boundary, and for contract boundary, again, you need to look at the specific contracts, portfolios. This is fundamental to the whole IFRS 17 calculations and presentations. So that is one point I want to highlight. Again, from the life insurance industry standpoint, particularly the recognition of contribution service margin, the CSM in the profit and loss account, because that has to be recognized over a period of time, and that is recognized based on the insurance coverage as you provide along the completion of the contract. So there certain decision makings are required, so you need to be conscious of that as well. In the fulfillment cash flows and getting that into our exact numbers. You need to have the discount rates applied. There is approach in bottom up, the top down approach. Again, this is a very technical thing. I'm not going into detail, but discount rates is another factor. Risk adjustment is also mentioned by Mr. Server. Risk adjustment is again mandatory to be part of your insurance measurement model under IFRS 17. One aspect, I think, in the morning session, we have been discussing Takaful. On Takaful, there has been debate that whether this comes under IFRS 17 or not, and how, if yes, how that is going to be applied. As we have in Pakistan, the IFRS framework, and there have been studies in the IASB, where the Islamic group at the IASB, International Accounting Standard Board level, they have also kind of done a study and presented where how this Takaful thing has to be implemented in terms of the IFRS 17. That presentation and that information is available on the net, so that can be detailed. But for now, what we are saying is that IFRS 17 is also going to be used for Takaful, and if there are any rules or regulations, the Takaful accounting regulation that needs to be amended, that will be amended. Our working group led by Umar Murshid Saab will be making recommendations for making such changes into those regulations. We'll recommend to the SCCP. Quickly on the auditor's role, just to share, I don't think so there is many auditor community sitting here, but I have very quickly 4 points to highlight so that you being on the receiving side should be conscious of that. From auditor's perspective, the risk of material misstatement comes first. So where are those risk of material misstatements in terms of when the IFRS 17 will be applied? Of course, the important matter that I've highlighted, future cash flows that are going to come into your model, that the selection of the discount rate, the risk adjustment I have mentioned, and the CSMs. All of this, that if there is any misstatement arising out of inappropriate application, selection of policies or measurement, so that is the risk of material misstatement for the auditors, and you will see those auditors coming to your companies will be focusing on to these specific point. Then, as I mentioned, the selection, how you are going to transit to IFRS 17, the 3 approaches that I've identified, because those have significant effect on the CSM recognition over a period of time. So IFRS transition approach is going to be under scrutiny when the auditors are going to focus on your company's audit. Then, as Umar Saab and Sarwar Saab also mentioned, that the availability of required or relevant people who understand this technical and complex standard. So, in the from an auditor perspective, I would imagine that they will have some real good experts as part of their teams. Technically, we say specialist. For expert, that's an external term that we use in auditing profession. So auditors will be taking along external experts. Again, surely the actuaries will be forming part of their team, but they will be using their internal specialist also. So that is something important from the auditor side. Lastly, from the point of the regulators, I'm sure there will be guidances issued. There will be interactions happening between companies and the regulator. So that is something auditor will be focusing on, that if there is any specific thing with respect to that specific company or on an overall basis, the industry is interacting. So that is one point where auditor is going to be focused. So that's about it. Thank you.
Usama, can I please request if we can take just a pause for the prayers, and then we'll reconvene.
Assalamu alaikum, everyone. Good afternoon. Firstly, I would like to thank the SCCP for inviting me to speak today. I'll be talking about the risk-based capital framework for the Pakistan's insurance industry, specifically about a concept paper that was developed by the SCCP and by the Pakistan Society of Actuaries in 2019. I'll also like to cover how RBC could potentially interact with IFRS 17. And if time permits, I'll also try and touch base on a proposed implementation plan that's there in the concept paper. So before we get into it, just to introduce the RBC itself, what a risk-based capital framework is, it's basically a capital requirement model that takes into account two things. First, the size of the company and the risk that it has on its balance sheet. So if a company is bigger than the others, it needs to have more capital than others. And if it has risky insurance contracts or investments, it needs to have more capital than others. So that's the basic concept of it. The structure that's there currently does capture the size. So it varies by the size of the entity. And to some very basic extent, especially for life insurance, it does cover some risks. But it's not as sophisticated as it needs to be. And therefore, we need to have a full-fledged RBC. As I said, SCCP set up a working group in consultation with the Pakistan Society of Actuaries, and this group worked on a concept paper which contains the initial or the proposed framework for RBC. This was circulated to industry for feedback, and the SCCP has already received feedback, which it is reviewing. The framework within the concept papers covers the first part, which is the quantitative part of RBC, which lays out how you would go about calculating the minimum requirements and how you would see which company is capitalized or is it sufficiently capitalized or not. This was done by benchmarking across similar countries, especially in the Asian region, and also by benchmarking against the Basel requirements that have been finalized by the State Bank of Pakistan. So we're going to just take a glimpse of the structure, just at a very high level, see what risks are covered. We don't have much time to go into the technical details. So the minimum capital requirements that are set out have two parts. First, we have the capital required, and then the second is the available capital. Within available capital, it has two components. So high quality capital, like the paid up capital, is called core capital, and then there are some ancillary capital which are included in the supplementary capital. On the required capital part, we have five broad risk categories. First is the insurance risk, then we have the credit risk, the operational risk, market risk, and the catastrophic risk. Within the insurance risk, the factors have been separately considered for life business and non-life business. And further down in the non-life business, factors related to premiums and claim liabilities have been separated out. On the life side, we have separate consideration for the liability risk and the surrender value in the products. And then further down on the life side is the 5 core risks that there are in the life product, which is the mortality, the disability, expense, persistency, and morbidity. On the asset side, on the market side, 5 separate risks have been identified explicitly: the equity risk, the mutual fund risk, the risk of changes in property values, currency risk, and interest rate mismatch. The model or the proposed framework also considers concentration risk, but that's not through a risk charge, it's through the calculation of admissible assets. As I said, the proposed framework was based on a comparison of the Asian countries. This comparison that I've done a high-level comparison with the Saudi Arabian market and the UAE market, and this is outside the paper, so this is what I have done at a high level. And in both frameworks, what I found was that with both the Saudi and the UAE, the proposed framework is aligned on the general approach. That is, conceptually, fundamentally, it's all the same. The risks that have been covered in the proposed framework are almost the same, but there are some modeling differences. For instance, the treatment of correlations between risk. both the Saudi and UAE are looking to take into account the correlations, whereas the proposed model has not considered that yet. And there are some other asset admissibility differences. But what I wanted to emphasize is that those are modeling differences, which during the development phases can be considered and developed if required. Fundamentally, the proposed model is aligned with what's being used in the Asian countries and what's there in the Middle East countries. Okay, moving to the interaction or the possible interaction with IFRS 17. Fundamentally, they're different. IFRS 17 is a financial reporting. It's for the investors, for the public use. RBC is the regulatory framework, which is for the regulators' use. It's for solvency. They are seemingly different, but there's one potential area where they could interact is that in RBC calculations, we need the value of liabilities that goes in as an input. And when we have those value of liabilities, we need to decide how are we going to calculate those liabilities. There are two possible principles that actuaries like to discuss among themselves. One is what we currently do, where we take a prudent valuation and assume that the risk margins are implicit in that prudence. Whereas the other extreme is where we do a best estimate valuation and add on explicit risk margins. RBC, by nature, is more conducive to the second method, where you do a best estimate valuation and explicit risk margins so that the risk margins can be calibrated at a certain level, whatever the regulator desires them to be. And IFRS 17 has also gone into the same direction, where it says that you have to have a separate best estimate liability and a separate risk adjustment. So this creates an opportunity, as Pakistan is already adopting IFRS 17, it creates an opportunity to have some inputs that go into RBC that are consistent with the basis of financial reporting. And also it provides an opportunity for companies to leverage what models and data they will be preparing for IFRS 17 and use them for RBC when it comes. I've reached the end of my time. I just want to say that this concept paper has a proposed plan, and the concept paper is there on the SECP's website. So I encourage you guys to go over the concept paper. It has more technical details and a four-phase implementation plan. Thank you.
Thank you so much, Osama. Thank you for helping us out on the time. I guess we have been able to stretch back on the time a bit. May I now request Mr. Amir Khan, Commissioner for Insurance at the Securities and Exchange Commission of Pakistan, to please come onto the stage to present shields to our panelists, and also Mr. Falak Sher Sumro, Advisor on Insurance at the SECP, to please come on stage for the shield, please, sir. Umar Saab, if you could please collect the shield first, please. Umar. Farooq Rahman, sir, please. Server Girami Sahab, sir. Mr. Osama Dangra after that, please. And Falak Sher Sumro Sahab, sir. And I'll also request the panelists and speakers to please also have a group photograph. My sincere apologies to all the distinguished guests that we have not been able to take question and answer sessions. It was just to cover this lag so that we are able to break in time, at least for lunch. All the speakers that we have are here, and I can take the liberty on their behalf that you can disturb them with whatever questions that you might have before all these respectful gentlemen. And ladies and gentlemen, with this we break for lunch, a long first session. And I'll just request you once again to please, if all of you can come back by 2 p.m. So that we can reconvene and start on time and let's hear what we are here to hear. Thank you so much. Thank you so much.
Pakistan is a home to 240 million aspiring souls. A country with all the requisites to be a major economic player in the region.